Welcome, everyone. Give this a little bit more time for more users to join. All right, we can probably go ahead and get started. So as everybody knows, this is a live Q&A. Whatever questions you have, speak up, ask. Anything new or advanced, doesn't matter. Feel free to raise your hand for me to unmute you so that you can ask your question. Anyone? All right, go ahead, Hector.
What's one of the ways you actually look for potential runners going into like the week coming up? For example, like do you use Benzinga, bar chart, and are you looking at like options volume leaders? Are you looking at anything that has unusual activity?
None of that. And the way I trade, I don't look for runners. So now it doesn't mean that I wouldn't want to be in something that's going to run. Um, to potentially answer that question, I like to trade when a stock is at support, when it's been going neutral. At some point, it's going to do some running, especially once it breaks through a resistance level. Um, so I mean that would be maybe how I would suggest trading it. I mean, I'm a lot more conservative than the type of trading style that sounds like you're gonna be trying to do or are doing. I don't do day trading. I don't buy options. I don't swing necessarily. I mean, I like to do leaps, but what I look for in a leap is very different than what you would be looking for in this scenario. I'm not sure if that answered your question, but hopefully it did.
Yeah, it did. Thank you.
All right, welcome. Okay, um, go ahead, Sid.
Hey, Hostile, how are you?
Good.
Yeah, I want to ask about MU. We traded options this week, and like it jumped from. I was looking at the daily chart, and it jumped from 88 to 92. So it has a gap between 88 to 92. So do you think it will come back to 88 and then it will move up again or something like that?
Hold on, let me load my TOS real quick. You said MU.
Yeah, MU.
Well, what I'm seeing, just gonna quickly share. Yes, there is a gap. Yes, I do believe it
Mhm.
will be filled very easily. Um, but it looks like it's range bound for the most part for now. It also looks like it
Mhm.
has more upward strength than downward. So we got support here at 84 and a half, and then you've got, I mean, it actually just bounced off resistance somewhere right around 94 and a half. So, I mean, it's got this range bound between these two. I definitely will fill that gap. I don't see why any reason why I wouldn't.
Okay. Okay. Yeah, that was only question I have. Thank you.
You're welcome.
Yep.
Okay. One second. Okay. Go ahead, Sherlock.
Hey, hostile. So I own 200 plus shares of both Apple and Sony, and my question was, is it better to own two leaps very deep in the money with a delta close to one, or these 200 shares of stock? And well, it was because I was asking because of the extra buying power you get when buying the two leaps.
Well, being that you've got that kind of capital to have that much shares, um, I would own the shares and sell calls on them.
Okay. Okay.
Leaps, I mean, yeah, leaps, there is more leverage. Yes, you can make a lot more money if the option moves in your direction relatively soon, of course. But if it goes sideways or takes its time
Right.
and allows
Yeah.
theta to decay, then the options, there's potential for loss. Whereas if you've got shares and it's going up but slowly, you can sell calls against it, weekly when IV is good and make a couple hundred every week, 200-300 a week. Or if you're doing like monthly contracts, you can probably make anywhere from 700 to 1,000 a month on the 100 shares of Apple. So I mean that would be the route that I would suggest because Apple doesn't move very much. It's not like it doesn't move drastically, but when it hits support, it tends to hold it pretty well and then starts retesting highs.
All
So I
right.
mean, that's what I would do. But
Yeah. Yep. Thank you.
yeah, sure, no problem. All right, let's see. All right, Joey.
Hey, what's up, man? Hey, I had a couple questions. First one is one I wanted to get out of the way. Uh, are you invested in crypto, or do you look into that at all?
No, I don't really do much crypto. Um, as far as the way trade, I do know that Mara and Riot are two tickers that are crypto that offer a pretty decent premium typically. Um,
Oh yeah,
but I think Phase trades those every once in a while. I don't really mess with crypto. That's not something I'm really interested in because I can't the data that I analyze on regular tickers. It's a lot easier to see, whereas like Bitcoin, it's just up. Um, I don't know, and I think that it's all there's manipulation happening there too. So
yeah. And you can't trade it tax free in your Roth IRA either, so that's a
oh,
deterrent.
didn't know that. How's that?
No, I just mean like if you're going to trade on Binance and trade cryptocurrencies and swing, coins, you're going to be charged capital gains tax.
Oh yeah, the coins themselves. Yeah, yeah,
Yeah,
yeah. I
but
mean, if you did it with options though, you wouldn't have to. I would believe. Because
yeah. So
if you're shorting like Mara or Riot, I mean, I'm
right.
pretty sure you don't even take ownership of it unless it goes in the money, right? So, but yeah,
Yeah, exactly. So I do intend to sell CSPs on Mara and Riot. That's definitely a trading strategy I'm going to try. I wanted to ask about leaps. You had brought them up earlier. What are you looking at when you get into a leap contract? And I wanted to maybe hear how you'd play it. Is there like a profit target you look for? Is there like a certain time? Because I know you had mentioned like halfway through a contract, um, theta will start eating away exponentially. So do you try to exit even, before that point? So I just wanted to ask about your leap strategy and what you look for.
well, so for leaps, I generally target things that show gaps. Um, especially
Okay.
gaps near a support level, somewhere near a low, right? If it does fill a gap, and typically if it's a big gap, then the likelihood of it getting filled is higher. Whereas if it's a small one, then it's probably going to take a while. Um, I'm gonna keep. I've used Clorox in the past multiple times, but I'm gonna use it again because it's a perfect example.
Okay.
I gotta redraw this out though because I removed it.
Are you sharing your screen, or should I pull it up on my TOS?
No, I'm gonna share in a minute. Just let
Oh,
me
okay.
draw this thing real quick. All right. All right. So you see over here, far to the left, there's a gap on Clorox. It was a pretty decent sized gap from 186 to 192. So that's like a $6 gap, which is fairly significant. All right. So as this thing went up, hit its high or whatever. At this point, I think I noticed the gap somewhere in December or late January or early January. So somewhere in here. No, I don't know. I don't want to get the time frames. I'll confuse myself. But okay, so obviously there's a gap. It goes up, and again here it created another short-term gap, right? See how this one's a lot more pronounced, like it goes from 203 to 212. Right, it's a much larger gap than this one over here. So that one filled itself much quicker, right? So it jumped back up and then fell down again. Um, and this is when it created a new gap, but also filled this one over here. So when it did fill the gap and it hit support, that was when I called out Clorox, right? So, and my advice as far as taking profits, timing on this was really close to on the money, right? And that's hard to do, and I'm not, I don't get that often, right? So in this scenario, it happened. I was like next day, I was showing $400 in profit, um, just from the move. So I had already known, all right, perfect. I got in at support. It filled a gap. Those are two really strong indicators this is going to reverse. And I had 3 contracts. I sold 2 for I made $800. I wanted to let the third one ride, and it just died. Right, so it pumped up. It died off down here. I still held it. I was down about 900 on it. And then I'd say within another 25 to 30 days, it made its move back up. Right, and it hit support. Hit the support line of 191. Or 192. Somewhere I sold above 192 when the price was above 192, and I made 180 on it. And that was literally 30 or 45 days later from when I got into it. Right. So the theta decay on it was like $1 a day. I paid $1,800 for the, no, $1,600 for the contract, $1,620 to be exact. And it was only $1 theta decay per day. So that means in 2 months, if theta decay stays at $1, I'm only going to lose 60 from the time I got in. Right.
Yep.
The moment it goes in the direction I need it to. So let's say I got in at the price of 182, and then it jumps up to 187 next day. Right. I mean that's like massive profits. Like let's say it goes sideways for 2 months at 182, and then I've been sitting in it for 2 months and it's been decaying $1 a day. And then tomorrow it rips and goes to 190 from 182. I'm instantly in profit. It's not like some of these other quick plays where people will get into it and then, not what do you call it? Sorry, is that Joey, is that your background?
No, that shouldn't be mine. That's someone else's, I
Let
think.
me, that's the thing I do not like about.
It's gone now, I think.
I'm gonna just remute everybody and then unmute you. So I mean, this is one of those where I say, if you get into something, and let's say you pay $1,600, if you're seeing a 15% return within the first week, I would say that's a good time to take money off the table, right?
Mhm.
I don't like to try to get greedy or squeeze something, and especially, think about this for a second. If I'm paying 1,500 or 2,000 for a contract, and I see 15%, what's that? 300? Let's see. 2,000 times 0.15, $300. And if 15% happens in the first, like I said, week, and you get a $2,000 contract, you're up $300. It's foolish not to take that. Anybody trading in a week's time, a month's time, something like that, with that kind of mindset, I want to get into a play and be out in a week, or I want to get into a play and be out in a month. I want to swing it for a month or something like that. They don't buy the contracts that cost $2,000. They're buying the ones that cost 200, 500, right? So they're like, well, 15%, that's really not much, right? But when I'm doing 15% off of $2,000, that's a significant amount of cash compared to those other contracts that only cost $300, $400, $500, right? So
Yep.
when I see a 15% return on any one of my leaps, I take profits.
Okay.
Because the leap, it's not there for you to. The beauty about leaps, for me, in my opinion, is when, let's say you follow somebody, Stock Daddy, Shark, whoever, and they alert something and it doesn't go in your favor. Let's say you buy a leap off of whatever they alert, and today it doesn't go in your favor, and in a week it's just still kind of going sideways or slightly down. And everybody that bought the same kind of contract that they did, that was like 2 weeks out or something like that, now they're going to be in the position where, am I even going to get back to my break even, right? But
Mhm.
you'll be sitting there, oh, I've only lost $12 on the contract, or I've only lost $5 on the contract. That's nothing to me. And then as soon as it moves in the direction you need it, 10%, 5% in the direction you need it to, it's going to show the profits that everybody else is looking to make in one day.
Mhm.
So I think leaps are fantastic because you can get in, you can relax. Right now I'm down $700 on an Apple leap, but it's cool. Apple's going to come back to 145, 150 by the time, in the next 2 or 3 months. I have no doubt that that'll happen. So I'm not worried.
Yeah,
Yeah.
that really helped. I had a question about the expiration date and price and strike. So like with the Clorox example, did you set the strike at the resistance level that you had charted? And then what was your expiration? Was it a year out, just a few months?
No. So, well, yes and no. For the strike, so my support level was 181, right? I got in, I want to say it was here. Yeah, it's right here. It had ripped the next day. So I got in like 182, right? So, and I went out a year out. I went 12 months out. I love 12 months because it's $1 theta decay. Once it gets to like 9 months, then it picks up to $2, $3, $4, $5 a day, depending on the size of the contract. Right now, it's only still $2. But anyhow, 180 was the strike. I think no, it was a 190 strike because I have 543 open interest. Right, I needed some open interest, so
Yeah, of
the
course. Okay.
price was at 181, 182. I bought a 190 strike. I paid 16.20 for it.
And it was 12 months out, correct?
Yes, at the time,
Okay.
correct.
Yeah.
Well, yeah, I mean, give or take a week or something, and then
Sure.
yeah, cool. So does that help?
It does. It does. I really appreciate it. I'll let these other guys go and maybe circle back if people are too
Sure,
shy.
no problem.
Thanks.
You're welcome. Okay, I think Brian was next.
Hey, I had a question about, can you hear me?
Yes, I can hear you.
Okay. I had a question about puts. When you're making, I usually for this past month, I've been trying to, I've always been exercising calls, but I know we can make money off of puts as well. But I've kind of been hesitant towards it because I didn't know exactly how to play it, I guess. And so I wanted to know, like, say for example, with SPY today, as I saw SPY hit its all-time high as 400, I knew that a retractment was coming. So that would have been a quick time for me to do a quick put scalp, but I didn't exactly know how to put the option contract for it. So like, what would you have done in that instance? So like, how would you set the put?
It depends on what broker you're using.
Oh, Webull.
I mean, it's going to be the same thing as buying the call, right? If you buy a call, it's just buying the put on the other side of the option chain.
So for example, I would just put a put for, just say if it just hit the 400 and I saw that and I knew the retractment was coming, I would just put a put for 399 and then just let it do its thing and then get out what I would, when I would like to.
Hold on.
Well, I don't have to necessarily do 399, but I guess I just want to make sure like it works the same way with calls and puts, but you're about to show me.
All right, can you see?
Mm-hmm.
What expiration were you looking at?
Well, I didn't do any puts. So I wasn't looking at an exact expiration. So you could choose whichever one you would like.
Which one would you have chosen? Let's go with that.
I guess April 5th.
All right. So you're familiar with the option chain.
Yeah.
And you understand the difference between the shaded area and the non-shaded area.
For the most part, I'm not gonna completely say yes. I'm still learning, but it's familiar.
Okay, so I'm gonna say no, just for the fact that you don't know how to buy a put, right? So
Right.
this bottom left corner is calls, buying calls. This
Right.
top right
Okay.
corner is buying puts.
Okay.
Right, so it's the exact same thing, as you're just on a different side of the option chain. Right, so you're bullish on the market. You think it's going to go up on, and we're talking about SPY. So you're bullish on SPY, think it's going to go up. You would buy a call on this side. You're bearish
Mm-hmm.
on the SPY, and you think it's going to go down. You would buy a call on this side. Does that make sense?
Okay. Yeah.
Same
And it would,
exact thing. It's just the opposite side of the at the money price. Right, so
oh,
currently at the money
and
it's
I would
400.
play it the exact same way.
Yeah, so yeah, if you're bearish,
Okay.
you just want to buy on this side.
Okay. And
So
I didn't know if there was any, I don't know. I didn't know, so I had to ask, but that's good to know that it's the same thing.
yeah, and when you're an option seller, right, and I'm not going to try to confuse you with it because, you know, although I believe that every person that trades needs to understand both buying and selling. But as an option seller, the green side is where I need the stock price to go towards, right? So if I were to sell something, I'd still do it on the same side where you're at. So you're buying in the
Mm-hmm.
white, right? You're buying the white background. I would be selling in the white background. The difference is let's say you buy the 400 strike at 99
Mm-hmm.
cents, right? So you're going to want the price to drop, right? But
Right.
if I sell an option at 400, I want the price to go up. Right? So when I'm option selling I want the stock price to go the opposite direction, right? So if I sell at the 400, I want it to go up, right? If I sell a put, if I rather, right? So do keep that in mind. This is where it's different with puts and calls, right? So selling options, puts and calls are going to be the opposite that they are with buying
False.
options. Right? So
Okay.
I would recommend that you you learn option selling. You don't have to trade it, just understand the concepts, and I guarantee it'll make you a better trader.
So when with puts, you can either buy or sell a put.
I can buy or sell a call as well.
Right. So and if I'm buying a put, then I would want it to go down.
Right.
But if I'm selling the put, why would I want the put to go up?
Because I'm shorting it. You short something, it's the opposite.
Oh,
Right. So if I
that makes
short
sense.
a put, I want the price to go up. If I short a call, I want the price to go down. If I buy a put, I want the price to go down. If I buy a call, I want it to go up. Right.
Right,
So
right.
they're relatively similar as far as how
Yeah,
you would play them. Right. So if I'm bullish, and let's say you go and buy the 401 strike, I would sell the 400. Can do the same direction together. Right.
right.
Um,
That makes sense. Yeah, I've only been buying, so I haven't even thought about selling yet. So that's a whole nother animal.
Yeah, I think you should look into it. I mean, you'd be surprised of the types of ways you can make money. It's not just
Right,
as simple as buy this, make money. Buy this, it goes up, make money. Like it's different. It's safer in some ways, in a lot of ways actually, especially if you go with specific strategies that guarantee you um, some kind of support, I guess you could say. Like
right,
when I sell options, when I sell, let's say, the 400 strike, theta decay works in my favor, whereas in you it hurts you. Right? So every day you lose value in your contract from theta,
right,
right?
right,
The one you bought, that same one you bought is potentially the one I sold. Right? So when I sold it to you and you paid 400 for it, that's kind of, I'm not sure if it's a 1-to-1 ratio. You buy it for 400, I sell it for 400. Not really sure, but let's just assume for a minute that it is. Right? So you buy it for 400, I sell it for 400. If it just sits there and doesn't do anything, stays at $400 strike or 401, um, for 2 or 3 weeks, you're just going to lose money where I'm going
right,
to make money.
right. Because of
Right?
theta decay.
Right. And even
Right,
worse for you, if you buy the 401, it goes against you. It starts to drop, goes
right.
to 398 or something like that. Well, let's say I got paid $500 premium for that position. Well, my break
Hmm.
even's at 395. Yours is still at 400.
Right.
Right, so there's another piece of protection there. So, and there's other pieces of protection to it. And I recommend you look into that style of trading. You might be surprised at what you find. I recommend everyone
Okay.
listening to do that. And if anything, you can just learn the selling side so that you know what it is. Like I guarantee you there's things as an option seller that you will not learn as an option buyer. But when you learn them as an option seller, it's going to benefit you as an option buyer.
Yeah. Is that what FaZe does? He sells his is
Yes,
that what FaZe? Yeah, okay, that makes sense.
option selling.
Yeah, I've tried to hop in on his lectures, but man, that's just a whole nother bunch of confusion. But I'll get it eventually.
Well, I'll be honest, it is a lot to take in. Um,
Yeah,
but once you figure it out, I'm telling you, you're going to be like, wow, this is the way. I bet you if you put
yeah,
time into it and you learn it and teach yourself, give yourself about a month, right? Learn all the terms, learn all the just a handful of strategies. You don't even really need to know a bunch.
yeah,
And once you figure it out, once you see how it really goes down, you're gonna be like, damn, I wish I would have learned this sooner. That's the thing that I said. That's what I said when I learned how to do cash secured puts and covered calls. Damn, I wish I had known that sooner.
yeah.
So
Okay. Well, thank you.
you're welcome.
Okay.
All right. I think P4 was next.
Hey, Hostel, Corey.
Hey,
Got Couple of quick questions. The first one is for the leaps. Are you always buying them in the mid, or are you buying at market, or are you putting limit buys on them?
Um, typically for a leap, what I really try to do is when it hits the level that I'm interested in getting in at, I want it
Hmm.
to happen when the price is still falling. So when the price is falling, um, I get in at a better price. So I can probably set a limit price at a little bit lower number and be able to get in, you know. But if it's in a, you know, let's say it hits, then I go to start trying to get in, um, it might start gaining strength, right? So at that point, I would probably go for a market order and just get into it.
Okay.
But it's really, it's not going to make too much of a difference when you're spending, you know, 1,500, 2,000 per position, right? I mean, it's a matter of 20 to $30, in my opinion, between a market order and just a regular limit entry. I mean, what you could do is say, whatever the mark price is, set your limit entry price at that. It's almost certain going to happen, or it's almost certainly going to initiate that order unless it's going in the opposite direction of the price that you've targeted, right? So let's say, just for easy numbers, it prices at 20 or 2000, right? So 20.00 to 2000. Um, you go to, and the price is falling. You're like, all right, cool. I'm gonna get in. I'm gonna try to get in at like 1950. But then it finds strength and support in the stock prices or the contract prices around 1960. That's not going to initiate your thing, right? So then now
Hmm.
you're going to be looking to, shit, I need to get in before. I mean, 2000. I was okay with 2000, but I was trying to get it from 1950, right? So I mean, let's be honest. At this point, it was 40 or $50, right?
Yeah, true.
So that's the way I look at it. Is I don't really try to harp over 10, 15, 20, 30, even $50 if I'm spending 2 grand, because 15% return is $300,
Hmm.
or no matter really how you look at it. Um, so that's kind of what I do.
Okay, thanks. For poor man covered calls, when you're selling the covered call against it, um, if it goes in the money, you just keep rolling it out, so it doesn't, so you don't have to get assigned. Because I know
In the money, as in the
the covered call goes in the money.
the short.
Yes.
So when that happens, you want to exit both together. That's my opinion on it, right? Because if it keeps going up and you keep rolling, I mean, yeah, you can roll for a while, but at some point you might not be able to. But when it, when they, excuse me, here, matter of fact, I'll show you an example. Am I still sharing my? No, I'm not.
Yeah, because like if you catch it at a support, right, and you're selling usually I'll sell a call somewhere around like a resistance level, with usually hoping to get like a 30 delta or something on it.
Well, first question, let me ask is, for the buying option side of
Hmm.
it, how far out are you going?
A year.
Okay, so you're basically doing diagonal leaps.
Yeah.
Um, so what I would do is I'm gonna show you a quick, easy example. Let's see. I'll just use Clorox since it's up here. So I'm gonna go with the January. We'll go with. So typically the way I trade these is going to be, I want to get it where the price is going to be under support, where the, I think, no, I'm sorry, the poor man cover call, the long side is already in the money, typically how people trade that.
Yeah, I usually get like an 80 delta.
Okay, so, hmm, okay. Personally, I like to get closer to at the money if possible.
Okay.
Um, So let me do a quick example of a calendar and
Hmm.
then a diagonal. And then I'll show you. And then, so it's resistance level. Let's just say, so stock price to 192. Let's just say it goes to 201. Right, so I got the leap selected, and then I would probably go for a 15 to 30 day contract, depending on how much I can sell it for. So the 200 is going to be the strike I'm looking at, which is where resistance is.
Mhm.
More like 202, 203, but I'm going to go with slightly before it just in case it kind of gets there and loses steam. Right, so I don't like the 15 day. I go for the 22. And keep in mind, um, open interest is a little bit less important here. Um, if we don't expect the price to jump up quickly. However, it could in this scenario, but we're going to use this as an example. Oops. Analyze. All right, so let's just say tomorrow you bought this position today, you got into the leap, and you sold the short position today, right?
Mhm.
Let's say Monday rolls around, Tuesday rolls around, come Wednesday, um, price jumps to $200, which is one of your strikes, right? Your
Mhm.
short strike, the one that is about to be in the money, right? So theta decay for a little bit. Let's go with like 2-3 weeks. Let's see. I can't do that too far. Yeah, so like a week before expiration, it jumps
Mhm.
up to the $200 strike. Well, if you were to sell both at the same time right now, you're making $246, right? If
Yeah,
I try
because
to
the leap
roll
gain
that,
money. Mhm.
yeah, the leap paid, and it paid more money than that short um, is losing,
Okay.
right? So currently at 200, it's not losing, but the moment it starts going in the money, it starts to lose, right? So and that's why you see this kind of plateau like this, and then it starts to head downward, right? Because if it were to pump that high, that far, it's unlimited loss, right?
Yeah.
I mean, I guess there is a limit to loss because of the covered or the poor man call, right? Um, so I mean, but long story short, if you get in the position and your calendar and or diagonal goes in the money on the short position, you want to get out of both because guaranteed you're in profit on one.
Mhm.
And if theta decays enough, you're going to see even more profit in that zone, right? So if say tomorrow it pumps, well, what's today's date? The first. So let's say tomorrow it pumps and goes to 200, you got $100 in profit, right? And
Okay.
the reason why it's less is because the theta has not decayed on the short,
Mhm.
right? But when theta does its job and the short's able to last long enough, that's where that 200, the extra $100 came into play basically, because that
Okay.
theta decayed $100, whereas the leap itself only decayed 15 bucks.
Yeah.
Right? You see the difference there. And same thing with a calendar. Calendar looks exactly like this that I'm sharing on my screen right now because it's got this
Mhm.
big triangle, right? I think it just moves. Um, so a calendar is both prices, both strikes on each position are at the same strike, if that makes sense. So instead
Yeah.
of this would be a 190 short and a 190 long, right? That would be a calendar.
I got
Um,
you.
it's minuscule the difference on why you would do one over the other. Um, I would say the diagonal or the poor man cover call,
Mhm.
you would only do that if you're really interested in owning shares. But play with both. I recommend both and see. I mean, here's the thing: is sometimes the diagonal pays more than the calendar, and sometimes the calendar pays more than the diagonal. Right? So every time I look into either one, I look at the other one to see. Right? Try to
Okay,
see the
I
difference
understand.
in the premiums and stuff. So that way it'll, which one is going to benefit me more, if that makes sense.
Yeah, thanks. One more question about
Sure.
the good old taxes.
Okay.
So in a standard brokerage account, you know, profits, capital gains, 25% and whatnot. Do you take that money out and put it into like a cash account, or do you put it into a separate account with like safer investments, or how do you handle those situations?
So when it comes to taxation on like a regular brokerage account that does get taxed yearly as income,
Mhm.
I just let it sit in the account and I try to make as much money as I can throughout the year, and then towards the end of the year, whatever I owe in taxes, I'm gonna take out of that account and pay it, right?
So you would liquidate some of the positions,
Well, I mean,
or are
if
you
you
using the profits to also buy other positions?
so if you hold a position for longer than 252 days, I'm sorry, 365 days. Um, sorry, 252 is the actual amount of trading days in 1 year. But so if you hold it for 366 days, you pay 20% capital gains, not regular income tax,
Hmm.
right? But if you're buying and flipping, you haven't held it for over 366 days, you're going to be subject to regular income tax. So if you're in the bracket of 25% federal tax, that's what you're going to pay on your gains, right?
Hmm.
And you won't know what your gains are until the end of the year, right? So if say right now you're up 5 or 10 grand, you could be up 100,000 by the end of the year, right? So you're not really going to know. If you start taking some of those profits now and setting them aside to pay taxes, you're taking away less leverage from yourself to make more money, right? And if you lose money, then that's calculated as well. So if you're negative at the end of the year, you're like down $2,000, we can write that off, right?
Yeah, as long as it's under 3, right?
Right.
Or it's okay.
Yep.
Okay. All right. Thanks a lot, man.
You're welcome. Okay. I think Michael was next. Okay, maybe he's away. What happened to the other person that was the name that started with X? Okay, I guess I'll just come back to that.
Hello, can you hear me? Osta?
Yes,
Hey, how you doing?
good.
So I have my question was right about I don't know if you know that though about selling options, right? So when you're selling options, right? So when you sell a put, that mean you bullish on the stock, right?
Yes.
But at the same time, like, do you notice like even if the stock doesn't like go up, it go down, um, I think your average rise and then you make money off that. You could just buy to close and you still make money. Do you notice that?
I'm not sure I understand what you're asking.
So what I'm trying to
If
say
the
right
price
is
goes, if it goes against you, you're saying you can still make money.
yeah,
Yeah.
because you could buy to close and then you could still make money.
Well, you need theta to decay before you start making money.
Because that happened to me like last time. Like I sell a put on a stock and then he didn't go. He goes sideways. Like the stock started like like going down. But at the same time, as it's going down, your average price I think your average price go down, but you still make money. And then he says like your percentage of money go up, but like if you buy to close, you still make money. And then if you sell a call, you bearish on the stock. I mean on the stock, but if it go up, you could still make money too. I don't know if you know what I'm talking about.
So I understand what you're saying. I don't think you
Mm-hmm.
understand what it means though.
Yeah.
If I sell a position for $500 in premium, so that's what they pay
Yeah.
me for that position. My break even is $500 below the current stock price. So from now until expiration, Theta decays whatever the price is of Theta decay per day. And by the time it expires, it's going to have decayed that much off the contract. Right? So when you buy the clothes, you pay less money than what you sold it for, assuming
Oh,
that's the
yeah,
case.
yeah, yeah. Yeah, that's what happened. That's what happened. When you buy it to close it, you pay less than what you sell it for, right?
That's the goal. It doesn't
Yeah,
always
yeah,
work out that
yeah.
way.
That's what I meant. That's what I meant. So I don't know if you see like you make money like regardless of both sides. If you go up, you make money. If you go down, you make money. You see that, right?
Again, if it goes against you, and if it goes
Mm-hmm.
beyond the premium you were paid, you are down. Period.
Yeah, yeah, yeah. If it goes beyond that, you were down. Yeah, yeah. All right. So, that's what I wanted to figure out because I couldn't understand like why do like I sell a put and then I'm seeing green, like and then I could just sell it to close and then still make money. I couldn't understand that. But I think now I got it a little bit better.
Learn more about theta decay and how it
Yeah, that's
affects
what I should.
option contracts.
Yeah. Yeah, I think no problem. Thank you.
You're welcome. Okay, sushi.
Hey, what's up, Hostile? Can you hear me?
Yes.
Yeah, so I just have a question about, I mean, I guess this is a combination of the two questions, but I like, how would you deal with like, how to avoid FOMO in general and like how to like not get emotionally too attached to one single stock? Because recently for me, I've been like very emotionally attached to Tesla calls and it's not been paying well for me. And I've lost quite a lot of money from it. So I was just wondering how you could deal with that, or what's your method of dealing with FOMO and getting too emotional attached to a stock?
Well, number one, you need to stop doing it. If you're losing money, you keep losing money, stop doing it. Don't keep repeating the same mistakes. Okay, so that's number one. Number two, if you can't handle the FOMO that buying options provides, then maybe you should look into a different trading strategy. Maybe look into shares. Go back to the easy stuff. Go trade some shares. It doesn't require any FOMO. It doesn't require emotion. It just requires patience. So once you establish patience, because FOMO is kind of a side effect of impatience, right? So I'm impatient. I can't wait. I want to jump in. That's FOMO, right? So that's a side effect of not having patience. So it sounds like maybe you should start with trading shares and get some of that patience experience because it's really vital, right? So when you learn to have patience, you learn how to control your FOMO. And I'll take it one step further and tell you that, once you're in the position to where you have learned patience and you're successful at trading shares, I still think buying options should be approached with high caution. They should look into, like I've told everyone else here so far, look into option selling, right? Learn how to do option selling. Because I tell you what, when I learned how to option sell, I learned how to do leaps. That's what taught me leaps is option selling. Things I was looking for when I was going to sell something, I learned it doing that. And now I can generally um, grab leaps and be successful. Like I've done a handful already so far this year, and only Apple's the one that's hurting me right now. Everything else is up, and I'm in profit still, even though I'm down 700 on Apple. I'm still in profit from all the leaps that I've done. So there's things that you can learn in different arenas of options, and I always say that buying options is the hardest thing to do because you're fighting theta, right? That's your number one enemy, and it usually wins. Actually, not usually. It always wins. It always decays contracts. Right. So you learn theta much easier in option selling, and you learn patience when you're buying shares. That's two guaranteed things you will learn when you learn those two types of strategies.
All right, thank you also. That was really helpful, man. Appreciate it.
You're welcome. Okay, Johan.
Hey, Hostel, how are you doing?
Good.
Would you mind to check Excel for me, please?
Looks like ass. Looks like shit. I mean, it's below. I mean, I'm not sure what you want me to check. There's no bottom here. What am I supposed to be checking? I don't know what to tell you.
Now you know why I'm pinging you.
I mean, but I wouldn't worry about it. Again, it's a new company. Yeah, it's at a low. I would probably, if you got some extra money, grab some more. Jesus. There's nothing else. I mean, there's nothing I can tell you on this. Oops.
I actually I was planning to average it down, but my concern is like I think this is a losing trade, and I just don't want to throw more and more money on the losing trade, because even though it's a shares, I I think, how about if it goes zero?
Well, I mean, again, it's a new company, so you can't just have gone into business and then go right out of business, right? I mean, publicly traded companies, they don't just go out of business right when they get in. Right? I haven't been in a year yet. I don't. I've never seen that before. Somebody goes into business, becomes publicly traded, and then goes out of business within a year. I've never seen that happen.
Okay,
So,
yeah, then I would go with whatever I want to put right now. So I will just do the
what's your
50.
break even?
$19.
Way up here.
Yeah.
Well, I mean, how
And
many shares you got? Oh man, I'm afraid to hear this number.
1,000.
So, in order to get halfway down to 780, you need to buy another 1,000. Oof. This is why, folks, we don't get in heavy. All right. If you want to do shares, go in slowly. I mean, have rules and limits. Set up a list as to why you want to get into something, and you know what I mean. Like super heavy entry. I mean, here's the question, Johan. You were in at $19, which means it was above this gap that it was about to fill. I'm not understanding why you would have got into a position like that. But, you know, it happens, right? It happens to the best of us. And you got shares. Personally, I probably would not. I don't know, man. That's a tough one to say, all right, I'm going to get more. Right? I mean, I look at it and I say, well, if your goal was $5,000 total in the position and you've got 3,000, well, let's get 3,000 more, right? But you're already knees deep, hell, probably shoulder deep at $19 with 1,000 shares. I mean, that's really high compared to where it is currently, and it's going to take that stock to go 100% plus for you to break even. The beauty of averaging down is going to be that you get to get out sooner, right? I mean, I guess you could try to do this where you average down and get your break even to say, like 1430, or maybe at this resistance point at 1312. But that's a lot of money. That's a lot of shares. That's over 1,000 shares. You'd have to get 1,500 probably to get to that price. Um, I don't really know what else to tell you on this one, unfortunately. I mean, there's no history beyond what we see here, and I don't want to tell you to grab shares and then it just keeps going to zero or becomes a penny stock. I mean, That could happen, right?
Yeah, and
I don't know. I
they
don't.
they don't have premium at all. I'm not even able to do covered call on it. If you even go like a year further out, there is not even dollar for my break even price. So no help from the covered call as well.
Well, that's see, that's the number one problem with a covered call is the fact that if it goes very against you like this,
Yeah,
you're
premium
look
die.
well, you're looking at just bag holding, which is what you're doing, right? And
Yeah.
the thing is, though, like, let's see, trying to remember what XL is. What's XL? You should know. You're trading it.
Yeah, it's a the company that convert the regular car into electric vehicle. So
Oh,
they,
okay. They're not going out of business, man. I just don't believe they
I
will.
like the company, but I don't know like why it dropped significantly. I can't even assume. Like I was not even thinking that it would drop below 15 because that was a very good level, and after 15 it just dropped like vertical.
Well, again, EV is going to get stronger. Biden's infrastructure plan includes benefits for EV stuff, right? So, I mean, excuse me, all EV
Um,
companies are going to benefit from the infrastructure plan they're talking about right now.
yeah,
So,
and the thing one thing I like about the companies, like they convert. They don't make their own vehicles, but they convert, and they have like good amount of contract, like big companies, Coca-Cola, and some other big
yeah,
companies
doing
that
like
they.
fleet conversion, yeah, XL fleet. So they're
Yeah,
they're doing fleet. Yeah, I mean that's big money because you're talking hundreds of thousands of vehicles that need to be converted before you even start messing with regular people like you and me, right? That let's say I got a Honda Accord and I want to make it an EV. That'd be pretty cool if it only cost me, 5, 10 grand, and then I can save on gas and all this bullshit for the next 20 years. All I need to do is change my tires and brakes. I mean, that sounds like a pretty good deal to me. So, if that were to ever come to fruition, that's where they're really going to start making money. But if they're going after fleets, they go after like Frito, they go after UPS, I mean, I think Workhorse does UPS or whatever, but it doesn't matter. Other companies that have fleets, I mean, you see how Amazon said, screw using other shipping companies, we're going to create our own. All right, so they just said they turned their shipping from the usual traditional thing into a fleet of what they want, right? So that's kind of what XL Fleet's doing is taking the old traditional form of transportation and business and converting it, right? So I think this has a lot of potential in the future, and yeah, it's at a low and it's scary. I'm not gonna lie, I'd be a little nervous too. Um, but I just don't see it going out of business. Not with the way EV's gonna go move forward. I just don't see that happening. Anything EV related will get government support. Mark my words on that.
okay. Another positions that I'm down is
What is it?
Clover Health.
Clove?
Yeah, it's a Clover Health, CLOV.
I mean, it's at second standard deviation. Um, Still another short-term company. Why you got so much money in these new companies? That's such a bad idea, right? This is a really bad idea. This is two in a row. How many do you have total that are like this?
Yeah, another is FRX. Probably you know that.
You've got quite a few. So I mean,
FRX, I got a lot.
why? Why? We teach the opposite of that. I know that you come to lectures a lot. I know you're in channels a lot. I'm confused why you're so heavy into these particular things. I don't understand. I mean,
Yeah,
what did you do? You need to turn this into a learning experience. If
uh,
you're to succeed in the future, You need to learn from what you've done wrong here, right? So
I swear, if I even get break even, I will close these three positions because like probably I have $100,000 in these three positions. Only these three. I'm down on Apple Leaps as well. I got four of those. I got seven Lee. I got PLTR. Uh, I have a like chunk of shares of PLTR, but I'm not worried about PLTR because Tilio has invested and it's a good company for it's a future innovation I would say about the software, and that's my field as well.
You have broken rules that we teach. 50% of no more than of your account, no more than 50% of your account in the market at any one time. How much you got in there?
Right now I have like almost 80% of my account.
So that's problem number one. Right? So if you had that extra 30%, you could average down on every single one of these plays. But because you got in too heavy too soon, now you're just having to sit here and watch it.
To be honest with you, I have only 60%. Yeah, I was little over 50, but this market significantly dropped, and I don't know whatever position I was, that dropped drastically. So I have spent like another 20% to average it down. I had only one Apple Leap, I had only one Lee Leap, I only had one Neo Leap, one PLTR Leap, but right now I have a multiples because I have averaged down a couple times.
So
And yeah, I also bought new positions. Like I bought Neo shares at 39. I bought Fubo shares at 21. Also, I got in SOS, couple thousand shares for those as well at $4.85.
sounds like you're doing too many things at once.
Uh, I don't even. I'm not talking about even my second account. This is my only.
Well, I mean, again, sounds like you're doing way too many things at once. You need to concentrate on less types of strategies. Just concentrate on cash secured puts. All right, you know how to do those. Like you're comfortable with that. Do those
Yeah,
only.
I have CSP, which is almost about 40 to 50,000 worth CSP right now. I have.
Yeah,
I
you,
got.
you should only do those because, and don't mix your account. Like if you want to go and try out leaps, do it in a different account. If you want to do shares, do it in a different, split it up. Don't put everything in one place because it's hard to remember where are my cash secured puts, where are my shares, or where are my leaps, right? So, if you have them specifically in one account, you're doing specifically that there, it's easier to manage. However, if you're doing multiple things, you got multiple accounts, that makes it harder to trade, period, right? I mean, if you have a method, like, I can do it because I've been doing it for years and I know what I'm looking for and I know how much capital I'm going to allocate to something and I can pretty much do it in one account. But I'm not gonna lie that if I start mixing up leaps, like say in my Roth account, I'm gonna start getting confused because I allocate a lot of money in my Roth account compared to my margin. So, just I think you should just only trade CSPs right now in all of your accounts, make money, right? Make money, don't lose money, and in the next couple of years, 2, 3 years, it sounds like you got quite a bit of cash. That's going to be $1 million if you do this strategy with the capital that you've got. You'll have $1 million very soon. But you got to stop doing leaps. You got to stop throwing everything in on shares at one time. Um, what I suggest you do, stick to the rule of 5% per position. You know, 50% in the market at any one time. Um, and I've been saying it. Market's going to come down. I've been saying it. I've been saying it since early January. I said market's coming down sometime in mid to late February, if not first couple of weeks of March. And it literally happened right on March 1st, somewhere right around there. So there's so many things you could have done differently here. And I'm not going to go down the list you're kind of on the spot. So I don't think that's fair as well. And there's also not a good looking thing here, but this is a inverse cup and handle, and I'm just now noticing that doesn't look too good for clove right now. But I mean, you know what that is. The other good news is you got a gap here to fill. Not a very big one, but it'll fill that gap. I wouldn't worry about it. So unfortunately, I can't wave a magic wand and get the price back up for you. I would if I could.
Yeah, hostile definitely. Even on break even, and I just want to get out. That's all. I just want my money back, no loss, and that's all.
It's just a bag holding game, man. That's all. Have patience. You'll get it. I wouldn't worry. I mean, I told
The
you.
good thing is thanks to you. I really appreciate that. I attended as soon as I joined. I think I believe it's over. I think 7 months that I am with OOT, and first I joined. The first thing I was attending your lecture on Thursday and Sunday night. I know that you are not doing on Sunday now, but I was attending your boot lecture, and you really convinced us to getting the selling premium. And I really appreciate Hostile. You don't know how much I appreciate for that. Otherwise, I have screwed myself because I had a cash, and if there is no good mentor, then I just play all the calls options, and theta is there. It just kill me, and the thing is my money gone because I cannot wait. It would expire worthless and it's gone.
Right.
But the thing is here, even it's like I'm 60% down on my couple of positions. I have shares. Probably I can wait a year, two. And I always remember that you have held a position for 10 years. I I remember that. The penny one.
And I made
The penny
money.
stock.
Well, no, that was one of them. I lost on that one. But the one that I'm still holding. So I had it in 3 accounts, sold it out of 2 when I was in profit, and I'm still holding the third account. It was up for $500 in profit last summer. All right, and then it dropped. It's been dropping. Gold, what it is. Fucking hate this crap. Let me take a look here. Um, Gold, I have. So this one, man, is a long story. Um, Barrick Gold, I bought when it was over $60 a share, and that was in 2011. I bought at its high. It averaged down as it fell. Um, I bought more at a really low of like $12, $13. Um, and then it jumped back up to 29. And that's where I was like 300 or 400 bucks in profit. Took the other two, kept this one. This one now I'm down again. Um, my break even at the time I think was 24.50 or 20. Shit. Hold on. Let's see. I'll have to get my information correct. I think my break even is 22.50 right now. Let's see. Oh no, I averaged down when the price hit 22.50. My break even is 23.84 on this, and it's at $20.37. So I'm down over $3 on it right now with 200 shares. Right? I mean, I'm down 700 bucks. I'm on this one position. I've never been down on this position. I think I started out with 500 bucks max, and then I started averaging down as the price fell. And I've never been down $700 in this position before, and now I am. But the point is, it's going to come back, and when it does, you have to take the profits, right?
Do you got GDX sleeps? I have
No, I don't
those.
have those, fortunately, but I've got silver and SLV and GLD leaps, which look like trash right now too. Um, but they'll come back. I'm not worried at all. And I believe that precious metals will start seeing a nice run here in the next month or so. I just believe that that's going to happen because they always perform well in May, June, and July every year, even if it's a bad year, even if it's like nonstop dropping and dropping. When it comes to these 3 months and every year, um, gold and silver find strength for some reason. I think it has a lot to do with the miners and um, not not earnings or profits, but what they're able to pull out of the ground and that kind of thing. I don't know what that kind of report is called, but yeah. All right, is
And
that
yeah, that's all. Do you think that we are entering in the bullish trend, or still correction is due?
well? No, I don't think there's going to be any more correction. I mean, yeah, I think it'll kind of go down some more potentially, but um, I don't foresee us continuing downward. Right, we got some strong months coming up. I think we see more neutrality. Some of the growth stocks are going to gain back, and potentially by June sometime they're going to create new highs, in my opinion, like Neo, PLTR. I think those are going to create new highs. I think Fastly will go back up over $100 a share.
Okay, one more thing. Do you suggest to buy Neo right now? I got shares of Neo, but I just got 100.
Yeah, the price is really good on Neo. I mean, it's kind of gone up recently, I think, right? Yeah, it jumped up today. So it was at,
Yeah.
let's see, what did it close at Friday? Um, it was at 34 on Friday. Closed today at 39. I would go for CSPs on this, to be honest with you. I mean, if you want to do shares, fine, but do covered calls on them if you're going to try and wait it out. Otherwise, just ride the wave up with CSPs. Um, I don't know. I don't. There's nothing wrong with getting Neo at this price. I think this is a good price.
Okay, okay. I
Let's
will.
say
I
that.
will. I will grab some more.
Because I mean, again, you remember when you were in it at 45.
Oh, you remember that?
So you should. I mean, that should be a reminder that your your price is
That
better.
time, yeah, that
And
time I
you
was
remember when
learning.
we were talking about that, I said the price is going to come back down to $38, $37, didn't I?
Yeah,
And
you
look
told
what
me that you
happened.
like 37. Yep.
I called it. It just didn't happen in the time frame I thought it was going to happen, but it damn sure happened. A little bit longer. I think it was what
It was before Neo Day.
mid January, I think. Or
I
no, yeah,
probably
you might be right
it's
before January.
yeah, because it was before Neo Day, and I believe Neo Day
Mm,
was on January 7th or
that's right.
9th.
That's right.
Yeah.
That is correct. And I was worried then about a pullback. I'm like, it's gonna happen end of January at the soonest, but sometime early mid March. Man, I swear it happened nearly right where I said it. Because I mean, as we started getting into February, I was like, I just feel it coming. Something's going on. Yeah, everything's starting to go neutral. All these stocks are hitting highs. Everything's breaching their highs, and there's a lot of stuff starting to go sideways. And I was saying, in the next 2-3 weeks, I think we're going to come down, and it came down in like 10 days. So, and I got that information based off of connecting the dots, right? I mean, I know certain months of the year perform a certain way. I know that they start going neutral after they hit highs, and then they start going neutral after they hit lows. And I know that the trend direction is going to start changing. Um, so, you know, you got to prepare yourself in that scenario, right? You start seeing a bunch of stuff hit highs and go neutral, and we're in the month that I'm expecting to see a drop or a pullback. That should be a good indication. Say maybe I should, number one, exit some of my winning positions. Number two, don't get into any new ones in the next month. Maybe sometimes sitting on cash is just as good as getting in a winning position, right? Because if you sit on cash and the market goes down and you were bullish, well, you just won in a certain sense, right? So
Yes.
study that. I think that will help everybody here. Study the months. Study historically what the months do. You know, when does it transition? The market doesn't just always go up, right? It's not ever just going to continue up. It never does, right? And if you as in everyone, if you acknowledge that and understand that and expect the market to do something like that, I call it being cyclical or cyclicality, I think is a better term. Cyclicality in the stock market in general is an expectation you should have. It goes up, it goes down, it goes sideways. Right? It doesn't just go up. It's never just going to go down unless an asteroid hits the planet. But it will go sideways. And know that the transition between bullish and bearish is sideways. Right? Unless you have a COVID black swan event where it just goes down. It's like up and up and up and then just tanks. Right? That's a black swan event. Doesn't happen often. All right. What happens often is stocks hit a certain high, right? And let's say a majority of stocks are hitting highs in a certain month that I would consider to be neutral to pullback territory month, then expect the market to potentially do that, right? Because it has its swings. The market swings wildly up and down and around, right? So it's important for everybody to understand that because that's also going to help you understand that if you're in buying option strategies, you should consider how to learn how to hedge. What's a hedging strategy you could use to protect yourself, right? Because again, the market doesn't just go up, it goes down too, right? And if you're in too heavy, it's going to be painful. It's going to be hard to watch, it's going to be hard to stomach, right? And if you're in shares position like Johan, at least you are protected in the sense that time is on your side, right? Play strategies that are going to work in your favor and not hurt you, right? So um, hopefully everybody can soak that in. Did you have any more questions, Johan, before I move on to the next person?
No, no, go ahead. Thank you so much,
right.
Hostile.
All right, you're welcome. I think Sid was next. Sid, you want to go for it?
Hey, hi. I have a few questions. Like one is, I bought sorry, AMD option which is expiring 4/16, and that has a 105 strike price. But when I bought, the price was high, but stock went up and price went low. So I kind of like I don't understand what happened there.
How long you
Maybe
been in the
some.
position?
Yeah, I'm in the position. It's very small position, but I just want to know why it happened.
How long have you been in the position?
I just bought it like yesterday.
Oh,
Yeah, so
I can
it's
see just by looking at the IV, that's what happened. It's at 0% IV rank. That means it's the lowest IV rank it's ever been. So when you buy an option, you want the IV to build. You want it to go up. And it looks like it went down instead.
Oh, you are looking at the 4/16/105 call.
Here, I'll show you what I'm looking at. I keep forgetting that. The screen's not sharing and just not a fan of
Okay.
Zoom. Not sure why. I just don't like Zoom. I hate how it brings the
Yeah.
list of people and separates the chat and everything. It's kind of irritating, but whatever. AMD, look at the top left of my chart. 0% IV rank. That means
Okay.
the IV rank is as lowest it's been in 252 days.
Okay. So I think it might be back up next week, maybe. Or I will just sell it. It's like almost break even price, so it doesn't matter. It's just moving around $1, $2 up and
If
down.
you're at break even, get out because the 16th is coming soon. What I would suggest is if you do want to be
Yeah, but
bullish
if
on this
you
position,
see it, stock moved like 3% today.
yeah, so get out of that, take your profits.
Yeah,
When
yeah.
it goes red
Sound.
again, grab
Mhm.
a leap. Don't grab 2 weeks out. You're asking to lose
Okay.
money. Learn, like,
Yeah, that.
doing leaps helps you learn how to buy sooner because then you get to
Mhm.
experience what the contract does with the leap. You know what I'm saying? You get to
Yeah.
experience the change in movement and price, and you know because there's such low theta decay, you can see how much the stock or how much the contract price moves relative to the stock price,
Mhm.
which is obviously relative to implied volatility. But if you're buying 2 week
Mhm.
contracts, you unless you're in and out today, you shouldn't be doing such short contracts. You should be
Yeah,
3 to 6
it was
months
just
out.
yeah, I did like 3 positions and I was in and out. I was just left with this AMD. Everything else I sold.
Oh, okay.
So
I would
yeah,
get
so
out of
I will
that
just
too,
sell
but
it. It's not that bad, so I will just sell it. And one more question, like
sure.
I just joined like 2 weeks before, and I don't know how to sell like call spot, like selling premium or make do a CSP. So
Um,
where I can learn that, like,
the selling premium channel is a place to start. Um,
okay,
which I think, I mean, I have some videos. I'm not sure if they're necessarily directly associated with option selling. I mean, I have 2 videos that talk about 2 selling strategies, but I don't think I have
hmm,
anything that discusses just option selling in general. And so I think the
okay,
first thing you should do is pay attention to that channel and ask questions in there, right?
okay.
Um,
It's selling premium chat, right?
yeah, and ask questions on, ask phase questions on. I don't understand why you got in this position. Have him explain it to you when he calls one out, right? Because
Yeah.
at least that way you can learn live. So he'll call something out, and then wait for him to fill the position so that he's actually in it, and then you can
No, this
ask him.
position was like I bought the call, so it's not selling position.
No, listen to what I'm saying. Wait for
Oh, so okay,
phase to get into his position before you ask questions, because if he's not in
okay,
it just yet, then it's not really a position. So wait till he gets into it, and then start asking him
hmm,
questions, right? It's the only way you're going to
okay,
learn option selling, in my
okay.
opinion.
Yeah, got it.
Okay.
Yeah, and I will go through some videos. I saw Faiz, like Faiz has some videos from his uh, l- uh, uh, education videos, maybe, or maybe some
I think those are
recorded
mine.
lectures. I will go.
He does have recorded
No,
lectures.
yeah, recorded lectures. So maybe I will go through past lectures, like where
There's
he.
one specifically in the lecture in his lecture channel.
Okay,
Let's see, please. It's the very first one.
okay.
That
That's
one,
214, right? Yeah.
yeah, that one talks specifically option selling. I mean, all of
Okay.
his lectures are option selling, but this was the first one, and he kind of went over basics and that kind of stuff. So that could probably help you a lot watching that
Yeah.
as well.
Okay. That was the only question. Yep. Thank you.
All right, you're welcome. All right, Barrios, you're up.
Hey, can you hear me?
Yes,
Oh man, thank you for your time and sharing your knowledge with us. Appreciate it.
you're welcome.
Just a quick question. Like a couple seconds ago, you were talking about Neo. I just want to know your opinion on it. Like I was trying to buy a call for April 16, and my call was gonna be a 40, and my premium price was gonna be 198. I just want you to know, like, what do you think about that?
Why are you
Also,
looking to buy a call?
sorry, I can't see your screen either, so I don't know if you could bring it back up. I don't know. I just want to buy a call because I see like how it's going back up. I saw it came down a little bit and then it came back up. So I don't know. I feel like the way the market is going and everything, it might go up. So that's my opinion on it.
And what makes you think that expiration is enough time?
Well, I feel like it depends what just happened today, since it was like I think it was trading around like 38, and then it went all the way up to 42. And I feel like 2 weeks it might kind of hit that spot, since today was like close to 40. So I don't know if it's enough room or it's too soon to hit 42 again.
What was the ticker again?
Neo.
Neo, that's right. Okay, and you said the 16th,
Yes.
and you wanted the 40 strike.
Yeah.
Okay, so if you held that for 2 weeks, so you
Right.
said you think in 2 weeks it's going to go up, right?
Correct.
So if you held that for 2 weeks, that's 14 days. Okay.
Yes.
14 times 7, that's $98. That's how much that contract would lose value
Every
in
every
that
what?
14 days.
Oh,
It would
14
lose.
days. Okay.
And that's assuming the theta doesn't increase, which it will. So expect that 98 to be closer to 130 to 145.
All right.
So with that in mind, do you think 2 weeks is enough time?
Now that I see it that way, I don't think so now.
Okay, so what do you think is a better time frame?
Let me see. In this, well, according to this graph, what is this? Only those 16 right here. Let me just check my phone.
I mean, like, time frame wise, you think 3 months is enough? 6 months? 2
I
weeks?
will probably
Another
push
month?
it up like another week up.
So you think by let's see,
Like
the
the
19th of
the
this
19th.
month,
Oh, actually the 23 of this month.
the 23rd of this month, you
Yeah.
think that Neo's gonna be past
Up-
$40 by the
Yeah.
23rd?
Yes.
If with that in mind, I'm not gonna say that it won't be, because
Right.
it's likely, right? It's at 39.66, but what's to say that it doesn't go down again for the next week, right?
Right.
So if it goes down for the next week, you're going to be screwed potentially.
Correct.
So, next question. If it goes down let's say you get into it tomorrow and then all next week, the market's red and it's going to kind of going sideways. If that happens, how much time do you think you need?
I'm probably gonna need more time. Like probably like 2 months.
Okay. So in 2 months, we're looking at June
Okay.
18th, probably. It's kind of
Yeah.
in the middle. So June 18th is going to cost you $525 today at the 40 strike. I feel way more comfortable doing this position, the June 18th. I'm sharing my screen right. Yeah. I would feel way more comfortable doing the June 18th 40 strike than anything prior to May 7th.
Okay.
And you understand why I would rather do the June than any of those ones you suggested recently or previously, right?
Yes.
Okay. So with that in mind, I would recommend or suggest when you move forward and pick plays and positions that you put these things into account, because the way I see it is you plan for disaster, you can typically come out um,
Losing money.
still alive and breathing, right?
Yeah.
But if you don't plan for disaster, so like let's say right now you don't get out of that position, or let's say you get into that position tomorrow and you didn't plan for a disaster, well, in 2 weeks it doesn't work out, your position's dead, it's worthless, right? But
Right.
if you did plan for it, you still have 2 or 3 more months, and guaranteed by June, I would put money on it that by June Neo's going to be past 40. But here's the other thing. Let's do an analyze on this. Let's see, buy an option. So let's see, buy, let's say June 18th. So June 18th, April, I'm just trying to find the middle of that contract. So how many days is that? 78. 78 divided by 2. 39 days. So 39 days from now is 30. That's going to be the most recent. Next trading day will be May 3rd, is the middle of the June 18th contract. Okay.
Okay.
So by May 3rd, we're going to need Neo to be at $41.75 by break even, or by the 3rd of May. To break even, the stock price needs to be at 41.75, assuming theta remains the same or goes up. Or I'm sorry, if it, let's just say it stays the same. Because if it goes down, then this number is going to climb. If it goes up, this number is going to drop. Right. So, if I were able to move theta right now in this chart, I'd take this purple line and I'd just raise it. And when I raise it, think about how this red little hash mark is going to move further to the left. Or if I lower the theta line, think about how this hash mark is going to move to the right.
Okay.
Right. So when it moves to the left, that's more money for me. When it moves to the right, that's less money for me. Right.
Less money for who? For me, you said?
Yes. So if it goes
Okay.
to the right, that means IV has shrank, and or the stock price really isn't moving much and your theta is decaying. All right. So theta decays, the red hash mark moves to the right. Implied volatility drops, red hash mark moves to the right. Those are two losing situations or scenarios. So again, 50% days of expiration of this contract by May 3rd. Stock price needs to be at 41.75. Right. Now, I think we can totally see Neo coming back to 50 at some point. Right.
Okay.
So let's say Neo went to $50 by the 3rd, you'll be up $607.
Per contract, right?
Right, per
Okay.
contract. And right now it would cost you $525 to get in that position. And I would say that oh, frick. Stupid things in the way. I'm gonna move this. There we go. Okay, charts. Neo is low IV right now. 8% IV rank. Let's see. Just do a little bit of math. Delta is 55. 25 minus 10 times 25. So fair price on this option contract is $5.50. It costs $5.25 right now, so that's good. You want it to be under that number.
Okay.
So I would go with a June or anything later.
All
The
right. So you
later
pretty
you,
much, sorry, he's pretty much saying that right now this contract is undervalued.
yes,
Okay.
because IV is low. The moment IV builds, this is going to build. And if you're in that position when it does, your position's going up in value.
I see.
So June 18th and beyond is a very safe play to get into a bullish Neo position. I guarantee you'll see. I don't want to say I guarantee you'll see money with the June. I mean, had you gotten the January or February 2022, I would say yes, absolutely. You're going to see money on that position on the 40 strike. January 2022 is $1,000. If it moves to 50 from where it's at, that's like a 30 or 40% increase in the contract price, assuming that IV stays the same. But typically in this scenario, with such a low IV, you're going to see your contract build in value a lot quicker, because when IV starts to build, it's going to really take off contract pricing, right?
Okay. Well, we're looking at what, like a year ahead from now, right?
Yeah, that's a year out. But I
Okay.
mean, but look at the open interest, 14,000. That's
Already?
that's
That's a
amazing.
yeah.
So this is very, very liquid. I would not hesitate at all to sell or buy any positions on this strike. Well, I would say just buy because I wouldn't sell anything that far out. That's too far. But buying, I would buy that if I wasn't
Right.
in positions right now. I mean, I got rules that I won't break, and if I were to buy that, I would be breaking my rules. So it has nothing to do with the stock price or where it's at. It's everything to do with money that I've got in the market. Period. Right.
Gotcha.
So, but yeah, I think that June 18th is safe, and anything past that, beyond it, is safer. You will see profits, and I think um, I truly do believe June you should see some profits. I mean, I would say wait for a pullback and then jump in, right? Because it went up today, right? It went up
You did
to
right.
42. Honestly, this might be kind of a pullback because it did kind of come back some
Kind of
from
coming
its
back a
high.
little bit, right?
But you could potentially wait for another red day. I don't see us starting to pump back up to 50 anytime soon. I would say you wait for a little bit of a red day, see if the stock price will, fall lower than where it's at, and then buy at the money strike. January, well, if you want to do the January, but the June, I would almost say you're almost certain to see profits if it does a small pullback, and then you're able to get into a position at the money. Then I'm like 100% you're going to see returns. Even right now, I think the June 18th, it's still pretty likely that you'll see some returns because, you know, $40 for Neo is still a low price. So long term, I think this one definitely. But that's
Okay.
my opinion.
So now another question for future plays. Do you recommend to like extend your expiration day like more than 2 weeks? Kind of like
Well,
dip,
if you're buying options, I
right?
would recommend every position you can to be a leap because I can guarantee you'll make money off of a leap.
Okay,
Right?
that's what
Even
you were
if it
talking
goes
about.
against you, you still have the potential to make money. If it,
Okay,
if I'm, like I said, I'm in Apple right now and I'm down.
yeah.
I'm down $700. If Apple comes back to life by August and comes up, so here, I'll show you. Let's see. So my Apple position, so let me just go to analyze here. My Apple position. So I had the 140 strike. So it's already kind of near that price, right? So break even today would be 139.10. We're definitely nowhere near that,
Mm-hmm.
right? So sorry, that's May 3rd. My bad. That's May 3rd. So let's say let me go to July 30th. Stock price of Apple needs to be at 143. You think we can get to Apple will get to 143 by July 30th?
I think so.
Yeah, I think so as well. And I guarantee I get out of that position with no loss. I'll be honest, by July 30th, if I see a $5 return, I'm going to take it. Right? I'm not going to wait around and this thing fall again. Forget that.
Yeah.
But, that this is a perfect example of I'm almost certain Apple's going to come back to 145 in the next couple of months. Like it's a upward moving company. So I'll get my money back. I'm not worried. And that's why I suggest leaps because it gives you that chance to get out. Like
Okay.
you feel like you've made a mistake. Shit, I made a mistake. Well, there's gonna be one chance for you to get back out of that mistake. Almost always with a leap.
Yeah. Yeah. I kind of made a mistake this week with Spike. I lost $1,000 in a put. So trust me, I'm learning my lessons, and now like listening to you makes more sense. So yeah. But Thank you so much for answering my questions. Appreciate it.
You're welcome. Okay. Ashley.
Hey, I was wondering if you could go over that math calculation you just did to determine that Neo call he was going to buy was undervalued. How did you do that?
So it's pretty simple. Let me just go back to it was June. Yeah. So what I did was subtract the bid ask, whatever the difference is, times the delta. And that number, whatever that number is, should be, if you're buying options, the contract premium should be lower than that number. Does that make sense?
Okay, I'm writing this down. So subtract the bid ask. Which one?
Here,
I mean,
I'll share my screen.
Okay.
Maybe a little easier to explain. So here, any strike, it doesn't matter.
Okay.
Hold on a second. Yeah. Okay, so the 40 strike, the bid is 515, the ask is 525. The difference between the two is $10.
Okay.
10 times 0.55, right? So 10 times, is it 0.55? Yeah. So 10 times 0.55 gives me 5.5. Right? That's $25 higher than current buy price.
Okay, so the delta was 0.55. Is that what you're looking at?
Yes.
Okay. Okay, cool. And so then as long as you're paying that or underneath it, and that's where you expect it to go, that's a good.
Yeah, I mean, you don't want to pay higher than that number generally, because that means IV is high. You want to buy options when IV is low, because you want to put the probabilities in your favor. So if you have a really low IV and you buy an option, the only real direction it has is up, and that's a benefit to you. But if you buy it and the premium's somewhat high, I mean, even at 550 or even 600, it's still average, but it's a little bit on the high side. But what if IV is super high and now the average is still 550, but now the contracts are worth 750 or 800, right? So that means that the IV is super high and you're paying too much for that contract. So you probably shouldn't. Now, there's nothing to say that if you were to get it and make money, right? It's still a chance. Don't get me wrong. It's just the probabilities are not in your favor now, because if you buy a contract with high implied volatility, the probabilities of it falling in IV are higher, right? Again, I'm not saying that they're gonna fall, but when you start looking at probabilities and mathematics, you start to want to put the math on your side and the probabilities on your side. Because when you do that, then you raise the chance of winning, right? And that's the edge that we all need to have, right? The more probabilities you have in your favor, the better chance and edge you're going to have in the market, right?
So what IV would you recommend if does it matter if you're buying something shorter term versus longer term, like these Junes and Leaps?
Well, I'm sorry, it does not matter, because the IV is the IV. It's gonna affect the contract price no matter what, right? So time frame doesn't matter on the IV. IV itself is going to affect all contracts equally, right? As far as, if IV moves a certain amount today, every single contract and strike that's in the market right now will move with it. What was the other question?
So what would you consider like a low IV or an IV that you would want to buy at?
Well, so there's a few things, right? This formula, this small little mathematical formula, is one way.
Mm-hmm.
Another way is having IV rank and the regular IV script, for you to see.
Yeah, I don't have that on mine. I'll have to figure out how to set it up, but I don't have that set up for mine.
I made a video.
I'll watch it. I've been watching some of them.
Yeah, so there's a video on IV rank and regular IV, and then I think so. One of my channels, I got two channels. One of them has the scripts in them. I think I also posted them in the script channel, the TOS script channel. So if you watch the video, it shows you how to put it on and explains what they mean, and then you can go and add them. That way, this is another way for me, so I don't really have to I don't really have to calculate the price necessarily. I'll just look at the IV rank and the IV, and if it's a stock or ticker symbol that I'm intimate with, then I already know what low IV means. Because, for all the tickers out there, this little yellow box right here that says IV87, there's no cap to that number. It could be 400, it could be 1,000, right? But there's a cap to this number on the left side. Its cap is 100%. Right, now here's the thing. Let's say NEO pumps up to 150 IV and then IV rank shows 80%. Right, that means that it still has a 20% chance of IV climbing further. And let's say it does. Let's say IV rank hits 100% and NEO's at 350 IV. That doesn't mean that NEO's IV cannot continue to build. It could go to 1,000. IV rank itself will just stay stuck at 100%.
Okay.
But do watch the video. It goes into more depth and detail on IV rank and that kind of thing. It's called IV rank or IV percentage. It just goes in a little bit more detail and depth and explains how to use them. I think it's a great video. Great
Yeah,
educational.
I'll definitely watch that. And then my other thing is what is your strategy? You said you don't really do like day trading or like short-term options. It sounds like you mainly do leaps and what, maybe covered calls and long-term shares, or
No,
what
I mainly do cash secured puts and leaps.
Okay.
And a cash secured put is, covered call and a cash secured put are kind of the same thing. It's just the opposite ends of, or opposite sides of the option chain. But I mainly do cash secured puts. I try to roll positions to continue to build credit. I try to roll positions until I'm able to see decent credit before I exit my position. I used to do shares. I don't really do it as much anymore because I make money faster with CSPs. I'm able to get in and out of CSPs weekly. I can make more money in the long run with shares, but short run I can make a lot more with CSPs. So once I get to like $1 million, $2, $3, $4 million in each account, then I'll probably start messing with shares, so that all I can worry about is limit exit and entry orders. I don't have to worry about options necessarily as much.
So what's the strategy with cash secured puts? Briefly.
Sell puts at support. It's really that simple. Sell puts at support.
But you're not actually owning the shares when you're selling calls or selling puts.
So if I sell a cash secured put and it goes against me, expires in the money, right? I need to expire out of the money, right? But it expires in the money. So for example, I sell a 40 put and stock price expires at 38. It's going to assign me 100 shares. So I need to have enough cash to cover that position in 100 shares before getting into that position, or they won't let you get into the position. Vice versa.
That was my worry. I've never sold any calls or puts because I'm like, okay, what if I do get assigned the shares? And I don't want to get myself into a position that I can't necessarily get out of. And then I know there's ways to do it if you play on margin and do like the strategies you were doing earlier with the calendar spreads and diagonal spreads and stuff, buy one, sell one, but I'm not trying to really play on margin either.
Well, I wouldn't do margin period if I were you, especially as a newer trader. Stay away
Well,
from
that's the
larger
only
accounts.
way I think to accumulate the difference, right?
Yeah, difference of
Otherwise, it
what?
would just technically, like, you wouldn't be able to roll them. Or is that wrong?
You can roll anything. You can roll any contract. It just matters on whether or not the premium's there.
Okay.
As far as CSPs, if you sold a 40 put, you got to have $4,000 in your account before they'll allow you to do it, right? And
Mhm.
if you don't have the money, number one, they're not going to allow you to do it. Number two, if you try to do it naked, they won't allow you because it requires a margin account to do so as well.
Right.
But cash or puts, you get assigned 100 shares, you own them. So if you get paid $500 premium in a 40 strike, you own those shares at $35. So if it expires in the money at 38, you're still up $200. You could sell those shares when you get assigned, and if they're still at 38 when you're assigned, you can sell them and make $200, right? Or you can hold it because they're shares now. It's not an option anymore. You have time, and you can wait until it hits the 40 strike again and get out with the premium that you initially got, which was $500, right? Covered calls in this scenario would be, if I were in this position, stock price hits $40. Instead of getting out of my shares, I would sell covered calls instead, right, at the 40 strike. And let's say it pays $500 in premium. Well, if that position expires in the money on the covered call, that means higher than the 40 strike. Then it's going to take your shares, but you keep the full premium. So in this whole entire scenario, you've made $1,000. That makes sense.
Okay. I think I would be more interested in the cash secured puts if I found a company that I actually liked enough to own that many shares.
But you don't have to own it, though. That's the thing. While it's an option, treat it as a naked one, right? And treat it
Okay.
as a call, in a sense, right? That's the mindset direction of a CSP, right? So you get into the position, then the stock pumps. You're winning. Take the money. Get out of the position.
Don't hold it long enough to be assigned them.
Right. You only want to take assignment if you can't roll for a premium, right? You can't roll for a credit, or the time frame is just too far out, or whatever the case, or IV's too low for you to sell calls on it. Or, I'm sorry, to roll. That's when you're going to have to take assignment, when you have no other choice. And the assignment option is there to protect you. Otherwise, you would have just lost money, right? So the CSP is meant to offer you the upside potential of being bullish with protection on the downside. Whereas if you buy an option, there is no downside protection. All there is upside profit, and it must happen quickly or soon, depending upon expiration. But if you sell a CSP, it can go against you for 2 weeks, for 3 weeks. And then if you've got a week left, you've had theta decay for 2 or 3 weeks, so you're already on top. So the moment that starts moving back in the direction you need it to, and it comes just right up to the price that you sold that strike at, you can get out with most profit. Right? So let's say you sell a 40 put, pays you $500. You sat in that position for 3 weeks, and it's been sitting at 45, 46. So you're just still seeing a little bit of negative, seeing maybe zero or negative $50, something like that, or maybe negative 100. And then tomorrow and the rest of the week, it's moving up 2%, 3%, 4%, whatever, and now you're back up to right at $40 strike or $40 price where you sold your contract at. I guarantee you that will be in profit. You don't even have to be past the $40 to be in profit. Right? So theta decays building or eroding the value of the contract that you sold so that when you go to buy it back, it costs a lot less. That's how to win in a CSP. And I always say to sell at support because if you get assigned, you're getting assigned at support, which means that the probabilities of the stock price moving up are higher than it going down, right?
Okay.
So like I was telling, shoot, I forgot who it was I was telling, but the Selling Premium channel, you should really pay attention into that and learn from FaZe. And as well, you got questions, always come back here and ask those as well. I mean, I'm more than happy to answer them. FaZe runs that channel. I taught FaZe, so I know that he knows what he's doing. I know that he understands these positions. So just keep that in mind as well, right? I mean, I preach this type of stuff because it's safe. It'll build you wealth. It's a consistent return. There's protection from loss multiple times, not just once or none at all, like buying a regular option with 2 weeks expiration. You've got zero protection.
Yeah, those are burning me. They are burning me more than they're doing well for me. So I'm very interested in the whole selling premium and the theta decay. Like I understand a little bit, but not enough, not anywhere near enough. So I'm interested in continuing going to FaZe's lectures, and I'll kind of peep into the channel, but I'm just not there yet. But the leaps do interest me. But my other thing with leaps is in a market like this where some stocks specifically are selling near their highs, you wouldn't necessarily want to touch those, right? Like how would
Well,
you
no,
find
I don't
something
go
like
for
that?
leaps that are at highs. I go for leaps that have filled a gap, an old gap. Were you in here when I was discussing Clorox?
Yeah, I was here for that.
Okay, so that's the
How far
example.
back did you go for that? Like a year?
Well, when I look for gaps, I use the 1 year, 1 day chart.
Okay.
But that's way safer, especially again if you're getting it at support, than a 2 week or even a 2 month contract. I don't think is enough time. Because again, if you get caught in a downturn like we just had, you get a 2 month contract, I don't believe that's enough time to dig out of the hole, right? So 6 months minimum is, I wouldn't trade anything less than 6 months personally, as far as
Okay.
buying options. Selling, it varies a lot.
Okay. Yeah, I think that would just suit my lifestyle a little bit better because when I'm at work, majority of the days I can't manage positions.
It's
Whereas
exactly why I sell these.
if I buy enough time, or then I don't have to worry about it.
Well, even buying enough time, having a leap requires you to pay attention to it, still on a
Well,
regular basis.
that
I
is
would say.
true, but I wouldn't be so stressed if it like downturned in the slightest bit right before the contract was gonna expire.
Yeah, with selling options and CSPs, I mean that's it's okay if that happens to you because you'll just end up owning shares, right? You're able to protect yourself, and that's the ultimate protection, right? That's the end of a CSP strategy. The end is getting assigned, right? Winning is exiting the position for money and or rolling the position and then exiting for money. Losing, in my opinion, is getting assigned, right? Because you didn't manage the position well enough to continue to roll it and then at some point take in a profit. Instead, you got assigned because you didn't manage it well. So it's we suggest this type of strategy because it helps you, like, so if you get into position and it goes against you, number one thing you do learn is how to manage it. But number two, if you do get assigned, it's not a losing play. You still can make money. You can still hold on to that, turn it around, and go in the other direction with it, right? And still make money. Whereas you buy an option, you don't make money in a certain time period, you lose. Bye goes your money.
So where do you recommend starting aside from obviously education and watching those videos, and what else, like is there a certain amount of capital needed to start doing something like that?
Yeah, I would say 10 grand's probably a good number. FaZe would argue that you could start with 5 grand. I mean, I guess you could. You're limited to the amount of, to really just one ticker or one option per ticker because you can only do 5,000 or $50, you know, stock price. Anything over that, you don't have the capital for it. So keep that in mind as well, right? That's important to understand. If you don't have the capital, you're only limited to, I mean, even if I'm trading 35 grand, I'm still only limited to, 3 to 6 positions, give or take, right? So the more you have, if you can put more towards it, I definitely recommend doing that. But starting out, you could start with 5 grand and just see how it goes. I wouldn't go super heavy on anything. I would probably start with like Laser. Laser right now is a really, really one of my favorite tickers, and it pumped. Still think it's going to continue downward. We might see. Well, again, Laser. I sold a 30p on this before, or when the market was kind of starting to go backwards, and when it jumped up, over $31 this last. It was on the expiration day actually, and I got out of that position for 95% profit. That was
Oh, wow.
beautiful. Yeah, and it was just slightly over my strike. And that's what Theta Decay does for you. It builds your profit so that you don't have to be like, for me to make 500 bucks or 400 bucks, if I were to buy an option, this thing would have to pump up, and I'd have to get out. And if I held on to it, I lose theta, and then I lose value, and then end up losing. Whereas a CSP, I sold the 30. This is what happened. I sold the 30. Boom, it dropped all the way down to 21, and then boom, jumped all the way back up to 31 and some change, and theta decayed this entire time. All right, that's a full 3 weeks at least, I think. And then the moment it jumped over 30, I was at 95%. That was lovely. That was one of my favorite plays. I mean, I did that with quite a few. I mean, PLTR did it. Neo, I did it. I mean, granted, I own shares in all of these because I had some contracts that were just so far out of the money that I really couldn't do much on, but I was able to average down. And I wouldn't really call it an average down because I didn't get assigned on those. I was able to flip them and make, 400 here, 250 there, 300 here, 600 there, 500 there. So I made about $2,000 in that time frame. And it was going against me. Everything went against me. And I still made $2,000. I think it actually is closer to 2,500 now. But I also own a bunch of shares because a lot of the stuff went in the money on me. So I, quote unquote, in my definition, I lost. But I lost without losing money. I'm just down on shares. Right? I think I'm down like PLTR on this account. I did one. I'm down $303 on it. So PLTR needed to go above 30 for this account to show value in it, and it's at $23. Now, let me rephrase. My break even on it is, I think it's 25. So technically at $25 I could get out of this. Maybe 26 actually. I'm $300 down, 303 down.
What's your time frame on that?
I don't
like to get.
I mean,
Or you said those are just shares?
Yeah, these are just shares. I mean, I got to
so
sign these from a CSP. This was a
Gotcha.
CSP, yeah. And so when it does come up, so when you see the price of PLTR at like 28, 29, maybe even 30, I'm gonna sell a 30 strike, 30 short call, because I want them to take my shares. Number one. Number two, I got 400 shares, so I get to sell 4 contracts, and typically at that price, IV will have built, and I'll probably be able to get anywhere from 250 to 350 per contract on that. So here's the thing: if let's just say for a second that I get $250 and I've got 400 shares, that's 4 contracts. That's $1,000 in premium. I want them, number one, to take my shares. Number two, I'm gonna get to keep $1,000 of premium on top of the premium that I got paid when we had that downturn, right? So PLTR. So my other account, I've got 400 shares on that, and some of them were 25Ps. Had 325Ps and I'm sorry, I had 225Ps, a 30P, and then I just bought some shares at 2250. All right, so the 30P is what I was trying to rescue. I was averaging down to rescue the 30P so that I didn't have to wait for PLTR to hit $30 to start making money again. Right. So
Gotcha.
now I can actually sell a call at 26 and a quarter, I think is what my break even is. Something around that, 26.30 maybe for PLTR and one of my other ones. So, I mean, if I were to try to do that today, April 15th at the 26th, I'd make $33. Now the premium's really low, so that's trash to me. But typically it's around this. Let me see, yeah, around this right here is what I'll see for 25 or so days out. The 29, yeah, see, it's still not. Typically, this is showing with good IV at like 250, 300. So when the stock price jumps to 30, I'll be selling calls on it 100%. Same with Neo, same with PLTR, or sorry, Fastly, some others that I got. I kind of went on a rant, I guess. There, does that help?
Yeah, that helps a lot. I still have a lot of learning to do, but that definitely helps.
Yeah, I mean, like I said, you're not going to get it overnight. Unfortunately, I wish it was that easy. Pay attention to that channel. That is the one that talks strictly about option selling. Ignore people that talk about credit spreads. Only pay attention to CSP stuff. Ask questions there. If you just want to write down your questions and ask here or whatever, now that works too. But definitely ask questions.
Okay, I definitely will.
Okay.
Well, thank you.
You're welcome. Okay. Who else? I thought I saw somebody named Queen with their hand up. Did they leave? I guess they did. Well, let's see. Actually got quite a few questions. Haven't been paying into any of the chats. Let's see. I'll start with YouTube since that's smaller. Um, Ricky727 asked if I think the current market condition is a healthy pullback or do I think it should go more? I think this one is pretty healthy. Will it go back more? It could. I have no way to know. But I do think this one's pretty healthy, and I think that come this month or sometime by May, we should start seeing the run back up. So I think we'll see a good run up soon, and then once the run up happens, it'll go neutral, and then it'll start its run up again. And we won't see highs on the next run up, but we're going to see it. I think we're going to see it try to test it and then do a retracement And then by July, we're going to see everything break through their previous highs, in my opinion. Okay, so let's see. All right, now I'm going to Zoom questions. Oh, there's a lot of chat in there. Sorry, I didn't see that, folks. So I'm only going to answer questions of people that remain. Let's see. Not here, not here. Benny, can I check soul support and resistance? Let's see. Take a look. So, I can tell you right now, IV is too low for CSPs on that. Although, still paying pretty close to 10% at the money, so it's not bad. But it's too low in price, in my opinion, to get any real solid premium unless the IV is just insane. And this still looks like it's coming down. Although it looks like it has pretty good support at $10. Resistance, you've got 1632, 2478, and then somewhere above 33. Let's see, moving on. They are not here. Let's invest. Yes, let's invest. Leaps are pretty much a swing trade option. Yes, you're swinging it. You buy the leap to get tons of time in case you get greedy and you didn't take the profit the first time you saw it. There's always a chance it comes back. Open interest, Ashley, you asked, open interest am I looking for on leaps? I look for a minimum of 500. Let's see. Sorry, folks, I'm just trying to get through the rest of these questions, make sure I get everybody's question answered. Jerry, what makes more money, option selling or swing trading? There is no answer to that. Right? And somebody selling options could be a better chart reader than the swing trader, or vice versa. I mean, they both make money. Don't confuse the fact that they do both make money. Which one's safer? If you're talking about swing trading options, then the option selling is safer. If you're swing trading shares, then shares are safer unless you're doing CSPs, then it's basically the same thing. Let's see. Chat going on here. Let's see, this person, they're gone. I'm not sure, DJ, what you were asking. Or, okay, you're not, never mind, you're not even in here. All right. I think we got through everybody. Looks like someone. Let's check this person. Riley. We go over SPY calls. Have a couple 394s for 7th. I think it's too soon. Actually, no, 394s and you're up. Should be up. And a 400 C for the 7th. Should be taking profits on those, Riley. All right, who else has questions? If anybody has more questions, feel free to speak up. Riley, I would suggest you sell when you see 5 to 15% profits on that. I would suggest you get out ASAP because short-term 2-week time frames, you're just asking to lose. Buy more time. You'll thank me later. As long as you got patience to hold out in case it goes against you. Assuming that. Anybody else? All right. Let's see. Not really doing charting, but I will, I guess. Looks like everything else I've been looking at. Downtrend. Add support. That's what skills look like. Less than a year of time frame to analyze. Not much of a ticker. I hate this stuff you see traveling just straight around $10 mark and then a month or two it rips to 46. That's crazy. I hate seeing that. I'm sorry. Keep forgetting I'm not sharing. There's not much to see. Let's see if I can I got a gaps to fill watch list. Let's see what's filled. AMD still has gaps. BA still has a gap. Bank of America has a gap. Citi, you see Clorox filled its bottom gap. Is definitely going to clear that next one above it. Expedia has a gap. I really want to grab Expedia when it drops. I don't know when it will, but it will. Maybe August, September. But I would love to get a leap on Expedia at like 10 when the price is at 104 or something like that. I'd totally be interested in that. Let's see. Halliburton has some to fill. This one filled it. Here's a good example of, man, IBM. I said at 118, I said this in one of my lectures. IBM at 118 is a really great entry because it's got a massive gap to fill up to 130. And look what it did. It filled that thing with strength. That's beautiful. Super fill. It's a perfect example, folks, of gap fill. It happens. Let's see. JMPR's still got some. JPM. As y'all can see, Laser did fill its gap here. I had one for Laser. MGM has one to fill. Small one though. MGM. The second one here, there's still a gap, but it's really tiny, so might not bother. This might not come down for a while, just because of how small these gaps are. I do expect to see them get filled. Microsoft has one. Again, small gap. These kind of some kind of pretty decent sized downturn that affects the entire market, not just certain things. Um, NVS, Novartis, this one has two gaps to fill, down to 78. Well, the first one, let's see, first gap has got to fill down to 81. There's the one that's got to fill at 79. And then the bottom one that it needs to fill is at 78. Current price is 85, 86. So totally see that gap get filled. I think the potential to be filled is pretty easy. I mean, you look at how Novartis moves, it pretty much goes sideways, but has massive drops and massive jumps. So this one, I mean, like I said, $78. If you see Novartis at 78, I think that's a solid leap. If you get 12 months on something like that, that'd be beautiful. RCL, another leap, or I'm sorry, another or yeah, if this thing filled the $60 gap, definitely buying leaps on that bad boy. Starbucks, same thing. Snap has one as well. Space filled its. You see that gap? That got filled. Now it has gaps above to fill. One from 39, let's see, 39.50 to 42. That's a gap that needs to be filled on the upside for space. So I think this one is actually, if anybody can get space for under $28 or enter a position when it's under $28 and be bullish, I say that's a great position to be in, and look for exit at around 42, 40. T triple Q's got some to come down. I think it will, but I'm not sure when. Wish I knew. Same thing with Trip. This has got a pretty good one to fill. It's way up there. Not sure. I mean, it's not a huge gap, but the range at which it gapped was pretty neutral. So I expect to see this come back down at some point and fill that gap slowly. Long-term gap fill. Uber, we got one here at 35, some change. I'd like to get into Uber down there. That'd be great. Here's a great one that I called out as well. UL. I missed this. I wish I got into it. I could have made about 600 on this one. But I gap fill, went down to 52, and then instantly went up to try and start testing this above gap at the 56 area. And it will. It's going to go into this area and it's going to fill that gap. I don't see, I mean, I guess I see a small little gap here up to 60. But beyond that, we're looking at a lot of resistance above that. So this is a great one. Had I got into that, I would have made some pretty good money. UPS, really want to get into UPS. Once it fills a gap down here at 124. Come on, UPS, drop. Need to see that gap get filled. I will be buying leaps on that. Visa as well. Really like Visa. Visa is super, super strong. Once it fills this gap down here at 187, 188, super strong support. Multiple levels of support here. I think this is a great gap fill if it does it. Definitely be in leaps on that one as well. Let's see here. So it looks like a bunch of questions. I did, Sandy, I did draw the gap zones. I drew it with this drawings up here, and I chose drawing tools and selected the square. And then I just kind of grabbed the bodies of the gaps and drew out that mark. Okay, looks like we have two folks with their hands up. Go ahead, Danny.
Hey, what's up, man?
Not much.
You kind of answered my question a little bit. I mean, some of them that you were looking at, you were going through pretty quick, but I mean, it seemed like in order to fill those gaps, it would have to drop like 50, 60, 70%, some of them.
Maybe. Yeah,
You can really see those coming back down that far.
at some point. I can't tell you when, but
Yeah.
it will. I have to. Those gaps, I mean, small little gaps, okay, maybe not. But decent sized gaps, decent percentage sized gaps from 5% or more,
Yeah.
those get filled. I mean, you see it, right? I mean, a lot of the stuff like people were saying Neo wasn't going to come back down under 40. Sure enough, did. I mean, that went up to 55, I think. Um, let's see, Fastly. You know, everybody was saying Fastly's not going below 70. Damn if I didn't. Damn if it didn't. It went down to 60. Nobody said it would go back to 60. Guess what? It did. Um, like Microsoft, when I just went over, it's currently at 242. It needs to drop to 206. I don't. That to me is reasonable. Same thing with AMD. It needs to come down to 62 from 81. That's a 20% drop, right? But at the same time, it has a gap it's been bouncing off of. It will go through that gap. You know why? How I know? Because it's been testing it multiple times.
Yeah.
And it's not going to give up testing until it does it. Now, if it, filling this smaller one down here, yeah, okay, maybe not. But if it's down, if it fills this gap to 68, 61, 62 ain't really that far behind. All right, so same thing with BA, right? I mean, BA needs to come all the way down to 160 to fill that gap, right?
Yeah.
I think that's possible. Now, when you look at the long-term chart, you can see the uptrend, right? So I'm not saying that in the next year that this gap will be filled. I'm saying that sometime in the next 3 to 5 years, this could be something that gets filled, like another black swan. So let's say the
Yeah.
next 2 to 3 years, this thing starts moving up and it starts breaking highs, and then we get a black swan, and now we're at full on scale war with Iran and Russia or China or something like that. This is coming back down, right? So
Facts.
that's all I'm saying. There's nothing
Yeah.
that like we can't control the world. All we can do is look at a chart and say there's a gap. It's going to get filled when. So I don't sit here and I go, damn, when is this thing going to fill? I don't ask that question. I just scan this every other day and I go, how much closer am I to my gap? Not there yet. All right, not going to pay much attention to it every other day, every few days. We'll take a look at this list. When I find new gaps, I add it to this list. When the old gaps get filled, I typically remove them off this list, like laser that needs to go.
Yeah. And so on gaps, what would you I guess the minimum you would consider for an actual valid gap?
Something you can see on the 1 year.
Something that's noticeable.
Yeah, like this. See how that gap right there? I mean, it's just
Yeah.
I'll remove it.
So just like a quick glance, if you see it, it's like, all right, yeah, that's a pretty
Yeah,
good gap.
yeah, like this. I mean, you see it. You see there's a massive gap there, and you go by the
Yeah.
bodies, not the wicks. That's a pretty good gap. I mean, honestly, look right here on City. It's got a gap right below it needs to fill.
Yeah.
Right. So
And what
that's
about different time frames?
I mean,
Because I've noticed
1 year,
that
1 day
I'll see-
stuff is longer term. The shorter term you get, like let's say you're looking at something that's 30 days, 60 days, or 90 days out. Look at so whatever time frame you're looking at, whatever gap you find in that time frame, if it does not exist on the 1 year, then it's in that time frame. So it's likely that whatever gap it made in that time frame that you cannot see on the 1 year is likely that gap's going to get filled in that same time frame period that you're looking at.
Yeah. Okay, that makes sense.
Now again, everything that I say is very relative.
Yeah.
So keep that in mind as well, because that's important to remember. I had a couple of people DM me saying, "Well, you said this," and I'm like, "Well, I said that it could potentially do this, but I didn't say that it's gonna." So, everybody's got to take my words
Yeah.
relative, educational and relative when it comes to doing analysis, right? Because
Yeah.
nobody's
That makes sense.
perfect, unfortunately. But I'll tell you, if I was perfect, everybody on the server would be making money, like rich money, not just making money. Because I think majority of people here are making money.
Seems like it.
At least that's
Cool.
the
That was
goal.
all.
All right,
Thanks, man.
cool. You're welcome. Okay, P4, go for it.
Hey, when you're looking at these gap ups, do you have a scan for that, or you just come across this stuff as you're looking at different tickers?
I just come across as I'm looking at stuff. I mean, I typically, when I look at something, I do my two favorite time frames are the 180
Hmm.
and the 1 year. All right, because the 180 I can see everything that happened in 6 months, and I can find really good support levels, really good resistance levels. But the 1 year, it also helps to find that stuff. It's just that if it's kind of like if I'm looking at the 1 year and I'm in this current time frame here, I'm not really sure. I mean, I could probably say, somewhere around the $49 mark is the
Can you
support
share your
level.
screen if you don't mind?
Oh shit.
Yeah, everybody's screaming at you in the chat.
All right, so I look at the 180 and the 1 year. Okay, the 180 typically, so look at the difference here. The 180, you can't really see, obviously the 1 year, the extra 6 months. But when I'm doing my trades, I start with a 180, and depending upon where the stock is, depending upon how much data is behind it, and if I need to go to the 1 year, right? So let's say for a second that the 180, I found what I'm looking for. All right, great. Well, I still go to the 1 year and I'll go, okay, how does it look in history? Do I have gaps? And where's resistance past this point at 76? Where's support past this point at 36? Right? And then I'll say, all right, well, if I want to know that information, I got to go back 3 years. Oh, okay, look at there. Now I see, a difference in the chart, right? Because this 3 year 1 week is showing me even larger gaps. All right, so Citigroup again, the gap down here to 42 is massive when you look at the 3 year 1 week.
Yeah.
All right, that's pretty massive. But also, again, when I go further past the 1 year and it has the data for me to analyze, I can see right here at 81.24, give or take. Yeah, 80, let's just say 81. That's a resistance point. So I
Hmm.
know that if this continues pushing past 75, 81 is probably going to be where it gets held up and then gets pushed back down to at a minimum, fill the 65.5 price gap.
So the gap up, you're always looking forward. So like if you have a gap, you don't really look at the data behind it. Because so here it crosses it, that gap is like, say for the last gap that you have all the way on the right, that's filled by the huge red drop, when it tanked. So you don't really look, so you're looking for something to happen or bounce off of it going forward, correct?
Kind of, yeah. So when I find a gap, anything behind that gap is irrelevant to the gap unless it's support off of the bottom of the gap. Then that makes it very strong. But beyond that, to see that gap get filled, it must be action happening after the gap was created.
Okay.
So in
Right,
this
and
scenario right here,
Mhm.
currently, where this big square is, Citi created a massive gap from 60 down to 54.
Mhm.
Right, it fell and then filled it pretty quickly.
Mhm.
Right, and then it fell again, and then it created a new gap. Right, so it created a small little one here. It filled it, fell down, and then created a pretty decent sized gap comparatively speaking to the rest, minus these massive ones. But this is a pretty big gap compared to everything else. So that tells me that I feel like there's pretty good potential for us to come back down here. But the gap must be filled to the right of it. So
Okay.
future movement must be the one that fills the gap.
So what's the theory of a gap having to have to be filled? Like it's not 100% going to happen, and I get it. You know, you can't predict the future and all that other shit. But why does it have to get filled, or what? Why is there a rationale to it?
It's a good question. I don't have a real answer other than when
It happens.
well, yeah, it happens, but people look at that area as shit, I forget how it was explained to me. Um, I can't remember how it was explained to me, but I do know that big gaps definitely get filled, small gaps, it's a 50-50 chance.
Mm-hmm.
And if something is within 15 to 20% of that gap, as far as stock price difference, I would say it's likely that it'll get filled.
Yeah.
Because maybe the whole entire market only falls 5%, but there's particular stocks out there that are going to fall 20 or 30.
Yeah. And then when you're doing leaps, where are you looking to get in, at the bottom of that, or are you looking for a support below the gap, or are you using the bottom of the gap as a support?
It depends. Sometimes the bottom of the gap depends how close that support is to the gap. If support's pretty far away, there's a chance it's not going to go there. But if it's, like, I'm trying to think. So let's say the stock price is $100. There's a gap down at 85. Shit, I forgot where I was going with that. Shit.
Like for this one right here, you had a resistance at, I can't really see your screen, 66, right to the left of the gap. Up, resistance, up, right there, which is the top of that gap. So you would expect the price to drop below that, right?
Yes, I'd expect it to fill this.
Okay.
So I remember what I was saying. If it fills this gap,
Mhm.
coming down to this support is not out of the question.
Okay.
If it fills this gap down here, coming down to the support level right below it is definitely not out of the question. But if it were like filling this gap and then this support level was down here, I'd say, that's a stretch. But if it's within a very close range, I mean, like I said, if all the stock has to do is drop 5 or 10%, and it's filled a gap, and or there's support below the gap another 5%, I mean, I wouldn't put it past stock to fall that low, right? We've all seen the stocks fall hard and fast, and everybody's like, "Wow, I didn't think it would go that low." And then you look at all these gaps that I've pointed out, and some people are like, "Well, you think it can really go that low?" I think, like Danny asked me, "Do you think it can go that low?" Yes, absolutely. When? That's the real question.
Yeah. All right, cool. All right, thanks, man.
You're welcome. Okay. Randall.
Hey man, so pretty much if I kind of understand like the whole principle of selling premium and following the wheel strategy, like I can find stocks at support and like just sell the puts. It's pretty much kind of like an easy way to just make a couple $100, right?
Yes.
It's just pretty straightforward and like not over complicated or anything.
I think it is pretty straightforward once you understand option selling in general.
Mm-hmm.
So if you understand how option selling works, understand all the terms and all the Greeks and how they affect option selling, then I think it's pretty straightforward, because then all you're doing is really one strategy typically. And it's going to be a learning experience on how to manage it if it goes against you. And that's going to, owning the shares is going to play a part in that management if you fail at managing the rollover portion of it. So with CSPs, I always recommend sell them and roll them until you can take profits, or until you can't and take shares instead. And taking shares is last resort. But if you do, you can still typically when you take shares, it's against you pretty hard. So you got to kind of wait it out, which is kind of what I'm doing right now. I'm waiting it out so I can sell covered calls on the shares I've got. So, but I will tell you that selling CSPs, I have a lot more luck getting in and out of them quickly. So, for example, all of the options that all of the shares that I'm in right now that I got assigned from a CSP, I could have gotten out of every single one of them with profit. So two things. Part of me, I wanted to own some of them to sell covered calls. And then the other part of me was like, well, like NEO, I was up $390 on my 45p, but I'm like, well, I got this 50p, it's only up $10. I could also be up the same amount on this one. I'm going to hold it. Well, I shouldn't have held it. I should have got out of both, because I could have got my money out of the market, made $500, and then turned right back around and got back in it where we're at now, and probably be up again. Right? So when I suggest CSPs, I suggest people try to flip them and don't sit on them. Yes, if you let it expire out of the money, you keep the full premium, yes. But if the market has fluctuations and volatility 3 or 4 times in between the time you sell it until the time it expires, you could have probably made $600 or $700 in that time frame instead of 400 or 500. So, but I think that's a more advanced CSP style. Once you learn CSPs, then you can start doing it that way. That's how I do it. I flip them. I'll get in and out of 2 or 3 contracts. I'll leave one sitting as a barometer, and then I'll do 2 or 3 more contracts on the same ticker. This is only if it goes against me once I get in the initial position. So if I get an initial, it goes against me, then I'll sit and wait for a little bit. And when I see a strike with massive open interest or IVs really high, and I got a support level on one of these strikes, then I'll probably sell 2 or 3 more contracts. And I might get so the first contract I might take in 500, and then when I get the other ones down at support, that might be only worth 300, but I just picked up 3. All right, so now we got a $900 premium. If I take profits at 50%, that's $450. That's the same exact thing that I just almost got for that $500 premium position. And had I taken my $50 profit on NEO that time, I would have made the full premium from the one position that I just rescued instead of decided to hold on to it for longer. So these are things that I've learned and are learning throughout the process of selling CSPs, right? And I used to think that it's okay to get into a CSP wanting to own the shares. And now my opinion is that it's not. It's okay to flip as many times as you can, because I guarantee you're going to be able to make the same amount of money, if not more, and be in a better position or be better positioned on the price itself if you flip it more often. Because 9 times out of 10, I found myself on the opposite end where I wanted to be. So, but when I flipped stuff and got out of it, I was able to get back in at a better price, get out for more profit, get back in at an even better price, and then watch it skyrocket back up to my initial CSP. So that's how you do it.
Cool. So basically, when you see a pretty good profit amount, like 50%, you take it and then just kind of wait and see if it goes back down to support.
Yeah, 50 to 65% is my guaranteed profit taking.
Cool. And if you're in a profit like that, do you buy to close or would you roll it out to a further date?
Oh, if I'm in that kind of profit, I would buy to close.
Okay. Is there ever a situation where you're in profit and you decide to roll it?
The only time I would try to do something like that is if I'm selling covered calls and it goes against my short call and I'm
Mhm.
near expiration and it's only like 50 cents, a dollar in the money. I can probably roll that position for credit to a higher strike, mind you, potentially,
Mhm.
or either or. But I can still almost guarantee take in money if I'm able to roll it and it be near the strike that I'm at. You don't want to try to roll something when it's, you know, $5 or $6 out in the money. Like you're probably not going to be able to roll that at all. You want to get it when it's close to your current strike price and when IV is high. Those are ideal.
Okay. So you pretty much just kind of bet on taking that 50 to 65% and you wouldn't worry about rolling it then?
Yeah, no, I mean, if I'm seeing 50 or 65, I'm taking it. We're not rolling.
Cool.
If I'm, if it's a 30 strike and we're at 29 or 28 and I've got a week or two left and I'm thinking we're in a downturn maybe, it just depends how I feel, but let's just assume I feel like I'm in a downturn. At that time, at 29 or $28 and I got a 30 strike, I would probably try to roll that then. And even in that scenario, what I would try to do is, depending upon the price and my outlook, I would probably go for rolling down the strike and taking in a credit if I've got to go a month out, or if I decide I want to roll a month out. I'm going to try and roll down to the 29 strike and still take in some kind of credit. Um, what happens with rolling down the strikes is you basically remove $100 off of the loss, so you be able to come back into profit sooner. So even if you're able to roll but for no credit, so like let's say you can roll down the strike but no credit, you're technically taking in $100 of credit, right?
Mm-hmm.
So there's a way to look at the contract pricing and everything, and between the expiration time frames to see which one's better for you, right? You can see which one's going to pay more, which one's going to pay less. You can go, well, do I want to roll for credit? Well, I get more than $100 compared to rolling down the strike, right? And if the strike says 100, or so let's say you go from 30 to 29, that's $100. But if you roll it and your credit's only like 75, it's better to roll the strike, right?
Yeah. Yeah. Is support like the main piece of technical analysis that you use, or do you also like try to pay attention a lot to other indicators?
Well, I don't really use any indicators at all. I have a couple on my screen, but those are not really. I mean, they work for a couple of things here and there, but nothing serious. My main stuff is support and resistance.
So it's just like a pretty basic thing that's not that hard to learn, and once you've got it down, you think it's like that's it.
Yeah, I mean, I tell everybody all the time, you could trade if you know how to do support and resistance. You could trade off of that. You don't need to know anything
Right.
else. I mean, granted, the more you know, the better. If you know candlesticks, great. If you know chart patterns, great. If you know how to understand trend analysis, great. If you know what price action and volume mean together, awesome. But you don't need all of those to be successful. You do need support and resistance. If you had all of those and not support and resistance, I would think that you're not going to be successful. But if you just had support and resistance and none of that, I think you would have potential to make money. That's the first thing I learned. And then I was losing the whole time I was trading for the first
Mm-hmm. Yeah.
certain amount of time. And when I learned support and resistance, that's what really taught me, okay, now I know what I'm doing to a certain extent. Now I understand when to get in and when to get out. Now I understand what this chart means. Because it used, when you first look at the stock market chart, you're like, what the hell? I mean, what is this? What is that?
Yeah.
But then once you learn
Yeah.
these things, it's like, oh, it's really not that hard.
Yeah, I mean, I've noticed since I've started paying attention to support and resistance, it's just been like, wow, really, game changer.
Oh yeah, absolutely. And when you
Yeah.
realize it, you're like, holy crap! I didn't even think it was that easy. I thought it was so
Yeah.
much harder than that.
So would you say that selling premium is a pretty semi-passive way of building up, accounts and everything, making
100%.
money? Cool. Cool. I mean, I'm like, I'm a student and I work, so it's kind of hard for me to check the Discord and then check the charts and everything. And so I've kind of
Right.
just been hanging back and paying attention and learning more. And I'm trying to find something kind of like this.
Right. Well, here's the thing: is what I preach and teach everyone about CSPs is, um, if you're young, open up a Roth account and do CSPs in it. If you're under 30, you've got you've got 30 years before you retire. In 30 years, if you do CSPs and compound your money in a Roth account, tax free on the profits, I guarantee you'll have millions. Guaranteed. 30 years, you will have millions. Not 1 million, not 2, not 3. I'm saying 10 to 20, 30, 40, 50, 60. I mean, at least 10 million. If you spend 30 years doing CSPs and compounding your money in a Roth account, you will have $10 million in there. 100%.
So I guess once you get to a pretty high amount of money, you just be selling more contracts, right? That's it.
Yeah. Yep. So
Cool.
what I would do, like right now, let's say I had $1 million, I'd probably sell 20 CSPs on PLTR, or 20 on Fastly, or 20 on Neo, or 30 or 40. Depends how much open interest is there. Right? I don't want to be like a major chunk of an open interest strike. I want to be like a couple of blades of grass in the yard, or a couple of specks of sand in the beach, right? I don't want my contracts to be noticed in the sense that they take up 20% of a strike, right? So, if I'm selling 30 and there's 3,000 open interest, great, perfect. But if I'm selling 30 and there's only 300, different ball game. Be hard to get out of that.
Yeah. Cool. Well, thank you so much for the answers, man. I really appreciate it.
You're welcome. All right, let's see. Danny. Go ahead, Danny.
Hey, I got random question and only millionaire problems, I guess. But when you start talking about, you have tens of millions of dollars in your account and you're trading that tens of millions of dollars, or even if it's just millions of dollars, I mean, wouldn't going in and out of trades for millions of dollars actually like affect the market, or is that just a drop in the bucket for the market, or no?
Drop in the market.
Yeah.
Yeah. I mean, again, you got to pay attention to what you're investing in. You got to pay attention to what open interest exists. I mean, again, if you're doing, like, let's say you're doing Apple or Tesla or something with 10,000 contracts, what's 30? What's 50? What's 100? I can do 100. Let's see. Neo. Let's take a look at Neo real quick. And let's just see how many contracts they got in like the next couple of ones. So let's see here. So like this, 23,000. That's insane. I could sell 200 contracts and it wouldn't even matter, right? Let's go over here. 4,479. So that one, I probably would say 40 or 50.
Yeah.
That's a fair number. I mean, anything above that, we're looking. I want to try to be like no more than 5% of the total open interest. So 4,479 times 0.05, and that's 223. So that's still great. Let's see what 1% is. Let's see, 4,479 divided by, sorry, shit, times 0.01. Yeah, so 1%. I think 1% is the number I'm looking at. Even then, I think 1% is a little high. But when you're looking at, almost 5,000 contracts and you're doing almost 50,
Yeah.
I don't see a problem with you being able to get out of that, right? But once you start getting higher up to like 100, 200, 300, and there's only 5,000, that's when it makes it a little bit more tricky because you're taking up a larger percentage of that open interest.
Yeah. Like I said, rich people problems, I guess. And I guess it would translate the same to like shares, because you said once you got to a certain
Yes.
point, you start just buying shares.
Yes. With shares,
Yeah.
it's easier though because you're looking at some of these doing millions and millions of shares a day. And there's no way that you're gonna. I mean, I don't care how rich you are, you're not gonna be trading millions and millions of shares. I mean, you're not gonna be trading. Let's see, just on
Like Kathy.
this list that I'm looking here. 65, 16, 30. So you're not gonna be trading 30 million shares of Microsoft at 242.
Yeah.
That's a lot. I mean, even at 100 shares, I'm like, damn, that's 24 grand. All right, so when you do have rich people problems, you look at the volume, and if today was, let's see, let me see if I can. All right, so what I would normally do is like in a month, if I'm doing trading shares. This is the shares. In a month, the average is right around 11 million a day, I would say. That's massive. Let's see if
Yeah.
I can
It's a
find
lot of
something way less volume.
it's a lot of transitions.
Right. Let's see. Cake 597,000 today. So this one, I'd say it averages around maybe like 45,000 a day. It's kind of an average. So in this scenario, I'd say, well, we're looking at $59 a share. If I did 100 shares, we're looking at 5,900 bucks. I don't even have to add that up. That's only 100 shares. If this is averaging 47, 50,000 a day, you know, as long as you're not buying more than say 10,000 a day or in
Yeah.
that day, shouldn't be an issue, right? Because I mean, shares is a lot easier because there's no actual time frame you need to get out, and shares it'll sell one
Spread
at a
it out.
time. Yeah, it's not
Yeah.
gonna be like, oh, you got 200 contracts. Well, I mean, even contracts, it'd be like, well, there's only 30 people with orders right now, so we're gonna fill 30 out of 200.
Yeah.
It's a lot harder to get out of CSPs than it is just regular shares. So that's why I'd say it's a lot more lenient with shares. When you're looking at volume versus open interest on contracts. Open interest on contracts is a lot more tricky. See, like at 1,289. Well, let's go on this side. I ain't even shit over there. CRSR. So right here, this one's got 2187 on the 30 strike. I'd say this one, 20 contracts. I try to say, for every 1,000 you can do 10. I think that's a fair rule of thumb.
Interesting. I got a couple more random questions if you don't mind.
Sure.
What was it? So I was talking to my I guess my accountant, I guess you could say, my financial advisor, about Roth IRAs, 401ks, and stuff like that. And I was talking to him about my work 401k, and how it's set up a little bit weird. Like I contribute to my 401k every month or every paycheck, so twice a month. But my company doesn't actually match me. But what they do is they do profit sharing at the end of the year. And so they just dump a percentage of the profits into my 401k, whatever they choose. And they do that no matter what. And so I asked my employer, I'm like, can I stop contributing to my 401k? And will you guys still dump in the profit share as long as it's open? They're like, yeah, you don't have to add anything to your 401k. We'll still give you the profit share to the end of the year into that account. So I was like, all right, cool. So I kind of asked my financial advisor what he thought about, like, did it make more sense to stop contributing to my 401k and contribute that money directly to my Roth IRA, And he said for tax reasons, he would leave it there because I can use that on my taxes. But I think that's where you kind of came in. We're like, that's why you have a health savings account, right? Because you
Yes.
can use the health savings account to lower your bottom end for taxes that you're not getting for your 401k contributions, right?
So here's the thing.
Something along like that.
Yes. So 401k, the amount of contribution you're allowed is more. It's like I think it's like 19,000 or something like that per
Yeah.
year.
Yeah.
Whereas a regular traditional IRA, you're only looking at $7,000. So, but his argument of, oh, well, you can, save on taxes or tax deferment, this and that. Ask yourself this question. Would you rather, if you're, I'm assuming you have a mortgage, yes?
Yep.
Would you rather the bank say, you know what, we'll defer your payments for a year, or you can pay every month and get some of the interest removed? What would you prefer?
I don't know. I don't quite understand the outcome of them, I guess.
Would you prefer, well, I mean, it's the same exact outcome, right? Would you prefer to pay later or now?
Now, I would assume, right now.
Yes. So if you would rather prefer to pay now on the mortgage to reduce your interest, then wouldn't you want to go ahead and start adding money to your Roth now?
Yeah.
Because if you defer taxes on your real retirement, you will pay for it later. But if you
Yeah.
pay for it now, then so it's the same thing as if I pay for my mortgage now, I pay less interest later. So the flip side is if I put money in my Roth now, I make money, right? So it's the same thing as the interest on the mortgage. So if I
Yeah.
defer the interest, I don't pay it for a year. If I defer the payments, I don't pay it for a year. But if I pay it now, then I start getting rid of that interest. But excuse me, vice versa. If I start paying or putting money towards a Roth and making money, which is interest, it starts now. Whereas if I just throw money at a 401k in 30 years or whenever I'm hitting that age of retirement, that deferment now comes knocking at my door asking for money.
Yeah.
So that
And
whole
that,
entire 30 years of you putting money in deferring taxation, it's going to come back and haunt you in 30 years. Whereas I could go ahead and put money in that I've already paid my taxes on, and whenever
yeah.
I make money off of now, they don't get to touch. So you should fire your financial advisor because he's a fucking idiot.
I mean, that's kind of how that was how I thought of it originally too. And so when I was talking to him, and I don't even pay for it. I actually get it through the military as a benefit or benefit off my dad. So I actually don't physically pay him. But I mean, that's interesting point. And yeah, that's kind of exactly what I thought too. I was like, why do I want to be putting to a 401k that I got to be taxed on later on more money, obviously, because when I get taxed on it, it's going to be a larger chunk of money.
Right.
And, put it in my Roth right now and, let those gains grow. And then 59 and a half, get it tax free.
Right.
I mean, that's what I have a mutual fund too. And I just took $6,000 out of my mutual fund, put it in my Roth for 2020. I'm actually waiting on the check for it right now. And then here in a couple months more, I'm going to put for 2021 in. At that point, I think I'll have about 25 in there. I haven't started trading it yet. I'm going to kind of messing around with my brokerage first to make sure that I can steadily trade. So I'm going to wait probably 4 or 5 months before I start trading in my Roth, but yeah.
Well, I always consider 401k just like a mortgage, right? And I always use the reference of the Roth and the mortgage because they're the same thing, right? So, with a mortgage, a 401k, same thing, right? Put money towards something, and then in 30 years, I might have 300,000. I might have $500,000, right? And I use this example to tell people instead of putting money towards a 401k, pay off your mortgage because the amount of interest that you're going to incur if you just pay the monthly payment is going to be more than that 401k is going to return you in 30 years, right? So if you
Yeah.
pay off the interest as fast as possible, and then you just start contributing to a Roth instead, number one, you've eliminated interest, and number two, you've created interest for yourself versus
Yeah.
telling these jerk offs, here's my money in a 401k, you put it in some kind of BS mutual fund, and then in 30 years, I'll come collect that measly ass 3 to 5% return you give me over the course of 30 years.
Yeah.
You
So
know,
do you have a mortgage?
I
You don't
used
have to
to,
answer that if you don't want to.
it's paid off.
Nice.
That's the
So,
first thing I did. I paid off my mortgage. Well, no, let me stop lying. That was not the first thing I did, but I put majority of my money towards my mortgage.
so is that how, so, I mean, if you don't mind me asking, you got like a 30-year loan and you paid it off in like 5 or 10 years? Or,
I had a 15-year loan and paid it off in less than 2, but I had a
Jesus.
lot of liquidity in my previous house, and when I
Okay, yeah.
sold it, I got out with. I mean, I sold my last house for 315,000. I walked away with. No, sorry, it was 208. I walked away with 292 after the real estate agent. And I owed 90 on it.
Nice.
So let's see. I'm trying to think how did that go. So 315. Yeah, I owed 90. Yeah, I owed 90,000. And then I got into my new property, and I put everything down on it that I could. See, so I owed 90. I walked away with 202,000. I put that towards my current property, which cost me 289, and paid that off. So I moved in 2019 of June of 2019. So a little under a year. I got paid off in January. So I mean, I really threw money at it. My mortgage as fast and hard as I could,
Yeah.
especially when I was in my previous residence because I took out a loan for 200,000 at the time, and I was paying crazy interest even with a
It's
15-year mortgage.
it's ridiculous. Do you end up you pay more in interest than you pay for the house. I mean,
Oh
that's the
yeah,
math I'm
on a
running.
30, on a
Yeah.
30, if you're paying just the minimum payment, yep, that's
Yeah.
exactly what you're doing.
I mean, that's what mine is. And I mean, this is my first house that I bought. I'm in Northern Virginia, so it's more expensive. But I paid 360 for my house. So I'm paying that off. And, I've refinanced once and I get decent payment. I mean, I try to pay $200 or $300 more every month. I mean, I know that doesn't seem like a lot, but any little bit helps. This is probably,
That's actually a lot for most people.
yeah,
Average person
doesn't do
divides
anything.
their payment in, well, the one that does pay extra, the average person divides their actual payment into 12 and then adds that number onto each payment. So if their payments are $1,200 and they divide it by 12, that's $100. So now they're paying 1,300 every month instead of 12. That
Yeah,
reduces it from 30 to 20 years.
yeah,
Just that by itself. But the way I did it was, for a while, I see my mortgage was like 1,500, and I was paying 3,000 on it for a while, and then I realized, why not just dump massive amounts of cash on it when I got it, right? So I'd
yeah,
get like, one year I had I saved up like 10 grand, and come tax season I got back 3,000. I got a bonus from work for 6,000. So I basically had, $19,000. And I was like, well, shit, I almost slapped this on the damn house. Took it, put it on there, and my interest went from like $450 interest payments a month to like 280.
yeah.
Yeah, and I'm
Yeah.
like, whoa.
Interest is a killer.
So I started doing that, and then towards when we decided to sell the house, I had gotten, I think we were in that house from 2014 till 2018. And the last couple of years, I was dumping 10, 15, 20,000 every 2 or 3 months. And by the time we moved out, I only owed, like I said, 90 on it. Walked away
Yeah.
with 202. Bought this place and did the same thing. I threw as much as I could throw at it. And the thing is, I maxed out my Roth. So I was able to max out both my wife and my Roth and then throw money at it.
Yeah.
So that's what I did, and I got it paid off so fast. And the actual amount of interest that I paid on this particular property was like $4,000.
Jeez. Dude, that's killer. I mean, I wish I had that extra money to do that, but
Well, I
I'm
mean,
just living in
I'm
reality.
not gonna lie, man. I'm blessed. I have
Yeah.
things that, um,
I mean, I'm definitely blessed too. I mean, I got, retirement accounts and Roths and mutual funds. And I mean, I have money floating around places, but I mean, if I can't just throw like 10 grand at my house every couple months. I wish I
right.
could. But I'm making do, and it's fine. Just trying to plan for the future, really.
Well, I mean, as long as you're doing something,
Exactly.
that's where
Yeah.
it's at. I mean,
Yeah. And like
changing the
I do it
statistic.
I do it more aggressive on my car. I mean, my car payment is like 500 and I pay like $1,000 a month
You
on
should
it.
do opposite because your car is simple interest. You're going to get
Yeah.
charged that interest no matter what. Your
Oh, really?
house, yes, your house, it charges you whatever interest you owe on that property every single month. So if it's like 3% interest, it's going to hit you with 3% interest on every single payment, no matter what you owe. Whereas with a car loan, let's say it's a 5% payment. Well, it's not a 5% payment on every single payment. It's a 5% payment on the whole entire payment. Does it make sense?
Yeah, it does make sense. And I
So,
didn't realize that.
so
I mean,
pay the
my mind,
minimum on your car.
yeah, my mindset was just get that bill out of the way as fast as I can.
Right. Well, I get that, and that makes sense. But that's what I did, right? So cars are meant to have loans because they're simple interest. They're gonna depreciate. So why throw all of your money at it at once when you can get it and own it without having to buy it,
Yeah.
right? And same thing with a house, but with a house, you're getting killed way harder on interest. So if you got the extra cash and you put it towards the car, I'd say stop doing the car and put it towards the house.
Yeah. No, that makes sense. I might start doing that actually.
You're gonna save a lot more money.
Yeah. Sweet.
Yeah, I mean, just thinking about interest by itself, $500
Yeah. I mean,
extra a month. Oh my God,
yeah.
you're gonna be like, it's gonna drop by $30 every single time.
Yeah, that's great. I mean, it's still just mind-boggling that, to buy a house, you have to pay more than the house just to borrow the money to buy the house. It's like, you kidding me? Like, no wonder why this country is so fucked up.
Well, they want to enslave people by putting them in debt.
Yeah,
That's
exactly.
the easiest way to enslave somebody. Force them to work, force them to do things when they owe all this money, when they're gonna fear of living on the street or fear of not having anything to eat.
Yep. But
And when
you did it the right way, man. Just pay it off as quick as you can, man, to save so much money. And now you have a house free and clear. That's all cash that you can have when you sell it. Like, you don't owe anybody when you sell your house. It's just all yours.
Oh yeah, yeah.
That's just
Except
killer.
for the damn realtor.
Yeah. And like that's the hard part too. Like first time home buyers, like it's so hard. Like, put 20% down on a house. Like, where the fuck are you gonna get 60 grand from? Like, people don't just have that laying around. But if you sell a house before, then yeah, if I
Wait.
sell this house, I'll have 100 grand.
You know what's crazy is here where I live in Raleigh, a year ago, a property we were looking at was $325,000, and it was like I don't know, like 2,200 square feet, brand new. And then we were like, well, shit, this place we're looking at, it's 290. I'm sorry, it was actually 274, and then we added 16,000 in upgrades. But we're like, well, this one only costs that much, and this one they want 325. That's stupid. I'm not paying extra, 30, 40,000 for, that.
Yeah.
Well, right now, that same property that went for 325 is now going for 525.
Jeez.
Raleigh's blowing up so hard and so
Yeah.
fast.
Well, I mean, housing everywhere has jumped this year. I mean, my house has gone from, I think, Zillow estimate, like from the last year, has gone up almost 70 grand. It's crazy.
Yeah, I mean, so I think, and this isn't bragging by any means, because I am the opposite of bragging, but Raleigh has grown so much that people from every single state has moved here.
Hmm.
Like I know people from at my job, there's not a single person from North Carolina. Not a
Wow.
single one. And there's 7,000 employees there, and I do not know a single one from North Carolina. And they're all willing and happy to pay 500 grand for something because they came from New York and Cali where they
Where
owned
it's,
an apartment
yeah,
for $1 million.
yeah.
So they'll come down here for $500,000-600,000 and get a $3,000 or $4,000 property. But the people that are from here, it's like, damn, 350 grand? That shit, that same house. So I saw a house, because I'm actually house searching, looking for something to move into and then rent this one out. But I was looking at a house the other day on my realtor sends me something through the MLS, but this particular property. So my first house, I paid 145,000 for it. This house that I saw the other day in an area that I like and I wanted to live, it was literally the same exact house, same layout. It's just the outside color was different, but the inside was exactly the same. And they wanted $375,000 for this fucking house.
Hmm.
And I'm like, I got the same house for 145 grand, and y'all are now wanting it for $375,000. You've lost your minds. But people up north and from Cali will come here and be like, 375. Wow, that's cheap.
That's a
I,
bargain.
I only had like the downstairs of this house for $1 million. You know what I mean? Like that's how they
Yeah.
think. So I get what you're saying as far as first time home buyers. Like imagine being a first time home buyer down here.
Yeah.
You need 90,000, 120,000 to get raped.
Yeah. I mean, I can't imagine buying a house right now as a first time. Like, I mean, thinking about how much I paid, 6 years ago, and trying to do that now, I'd be like, geez, sucks.
Yeah, no, I mean like we were looking for property and I'm like I'm just so discouraged because it's like man, this stuff that we're looking at right now, I swear it used to be $150,000 in the areas
Mhm.
that we're looking at. The ones that are in Raleigh and around the really populated areas, the very high, what do you call it? Shit. The ones that are in demand, the areas that are in demand.
The high density areas.
Or I wouldn't call it high density. I just say it's the areas that are really like
Yeah,
higher
the
class. It's
popular places.
all new and everything's clean and all new
Yeah,
properties and all the
upscale.
jobs. Yeah, and everything's around there. That area, you double the price. That $375,000 house is now 550.
Yeah,
So the stuff that costs too much it's not even near where we want to be.
yeah,
That's the point I'm making. The stuff where we want to be, that same house is 550,000.
yep. It's
Insane.
crazy. I mean, that's the same as it's here. I mean,
And it's
like I
like
said, I'm in
5 miles
northern.
away.
Yeah, I'm in Northern Virginia. So like the closer you get to DC, the more expensive it is. So like
Right.
the house that I own is, the house that I'm in right now is like $400,000. If I were to go 10 miles closer to DC, that same exact size house is probably like $700,000.
Yeah.
It's
Yeah.
like, geez.
Yeah, DC is pricey too. That's one of the
Yeah, dude. It's
expensive
crazy.
places in the US.
Yeah. Yeah, sweet. Thanks for the chat.
Yeah, of
Sandy, that tax question, ideally you'd want to be owed nothing and given nothing. Because if you get money back from the government, that means you gave them a interest-free loan for the year. That's how I understand it, at least.
I gotta, where's my damn? Trying to get out of this. There it is. Okay, Sorry, I didn't see any. Let me look at the rest of the questions real quick. Yeah, Sandy. I guess what Danny said was right. You kind of want to break even. That means you didn't pay too much, and you didn't pay too little. It's actually perfect to not owe anything and not be owed anything. That means that you got all the money that you were supposed to get throughout the year, and they don't have to give you back any. And typically, when they give you back something, they've taken more than they're giving back. So if you're breaking even, then you're keeping more. Okay. Anybody else? Any questions? I'm gonna step away for about 2 minutes, use the restroom. I'll be right back. All right, I'm back. Anybody have any questions before I end this? No one? Well, as always, guys don't have to wait for wait for these lectures to do questions. Our support staff is around to help with anything, and if they don't have answers, they will come to those of us that are more experienced for the answers. But I do encourage everybody to show up to these with questions so that not only you can learn, but everybody else can learn as well. So, last call. If no more questions, I will end it for the night. All right. Well, thanks, folks, for coming, and we will see you next time. Have a good night.